of course, the lead up to the CEO joining us on the program later.
Looking forward to that, very much looking forward to that in the second half of this show. Let's get the second half of that show underway. We are counting you down to the opening trade. We're not expecting fireworks first thing this morning, but the next few days, there's a lot to digest over the next kind of couple of sessions. Here we go. We are pretty much where we were exactly yesterday. I chuckle because yesterday the FTSE 100 couldn't make up its minds in the first few minutes whether or not it's going to be positive or negative. Feels like it's just about positive. We are struggling to find some direction here. Stock 600 again, kind of just sitting on its hands, waiting to see what's going to happen. Individual stocks, as Critty says, I think probably where the action is going to be this morning. Keep an eye on Deutsche Bank this morning. It's expected to be good. We'll talk about what's happening with some of the pharma stocks a little bit later on. The IBEX mildly negative, the CAC mildly positive, the FTSE 100 mildly positive. The stock 600 is up a whopping 0.6%, Critty, less than 1/10 of 1%.
Yeah, exciting stuff, clearly. But I think to your point, the action is underneath the hood. I'm going to go from a sector basis first because we are getting some headlines on the individuals. But just while we're getting that initial prints out of Deutsche, we'll probably take a few minutes for that to show up on the exchanges. From a sector perspective, it looks like commodities are in the back seat. So you are seeing the likes of Shell, Total, Rio, BP, basically your biggest index contributors to the downside. And like I said, the DAX is going to take a couple minutes to open up as well. You on the UK side, though, you do have some of the biotech leading the charge here. From an index perspective, AstraZeneca seems to be the big index contribution to the upside, higher by about 1% in the opening trades, alongside Unilever, but it does kind of feel like a little bit of an autopilot trade this morning, Guy. We are, however, getting, speaking of that biotech space and the pharma space, Bavarian Nordic shares in open auction extension over in Copenhagen. So we're not getting early pricing there, but we're going to keep an eye on what that actually looks like.
We're going to be talking to the CEO a little bit later. My eyes are glued to the DAX. I wanted to see that first print coming through on Deutsche Bank. At the moment, we don't have it. As soon as we get that, we'll get the German market to be open. But elsewhere, I think broadly at index level, we're waiting. At a single stock level, I think there's a few things going on, a little bit of rotation going on below the surface. But in terms of the kind of the individual movers, we're waiting to see Deutsche Bank come through. I think it has no...
Still waiting.
I got excited there for a moment. It nearly opened.
Stop jinxing this market, please.
Yeah, I'm terribly sorry. Can we please get on with this? Can we please price Deutsche Bank so that we can get this market open?
We're going to bring it to you. We're going to bring it to them. In the meantime, we might as well just bring in our guest here because it feels like that's where the conversation needs to go. But we're really talking a lot about whether or not you invest in this market, whether or not you invest in the U.S. as kind of a dive in post valuations, or whether you dive into Europe as the catch-up trade as a play on the States.
Yep. Well, let's catch up with one of the guests we talked to yesterday. Maria Manucci, M&G Investments Fund Manager, joined Bloomberg yesterday. She had a pretty positive view on the European side of the fence.
Europe continued to be very attractive from a valuation standpoint compared to other equity markets. So in a medium to longer term sense, I think there is value there. There are companies that are very global in nature and that have exposure to very interesting sectors that could also do well on a cutting rate type of environment. So there is opportunity there for the medium to long term, especially in an environment of soft landing where you can continue to have this grinding growth on the background.
Maria Manucci joining the Pulse yesterday. While we've been tap dancing, Deutsche's opened. Deutsche is up by 2.74%, so we're getting a positive print coming through there. It is up quite strongly on the back of the legal story. Bavarian Nordic, we're going to be talking as well a little bit to that company later on and figuring out what is happening there. But Deutsche is up. So let's turn our attention to this morning's guest in this hour, Helen Jewell, EMEA CIO for Fundamental Equities at BlackRock, joining us now. Great to see you.
Always great to be here, Guy.
What do you make of these markets right now? August has been fairly choppy. We're kind of waiting for some more guidance. Where are we in terms of whether or not we want to choose the United States or Europe? Where are we in terms of whether or not we want to choose equities over bonds?
Yeah, I mean, choppy is one good word for it. It was a very interesting start to the month. But I think what's really important is that the markets are firstly back to the levels they were before that. And secondly, a very interesting thing which is going on under the hood is if you look at actually the cyclicals versus the defensives in Europe, then the defensives have outperformed through this month. And I think that's what the market is really saying. The market had almost priced for absolute perfect soft landing, a perfect soft landing. And of course, what you saw in the US is just a reminder that soft landings are very difficult to navigate, and there is a wide range of what soft landing can really mean. Concerns on the recessionary side perhaps starting to come through. And that means the market has shifted a little bit more defensively than it was before. And of course, tomorrow is going to be a big and important day, really the indication of what's to come in September and whether we're looking at 25 or 50 bips, and some reassurance that there is some kind of plan for how the US in particular is going to navigate some mixed data that we're seeing coming through.
What this month has told me is that the market is clearly scared about a recession. But it's also told me, having spoken to an awful lot of CEOs over the last few days, that they're not. Why the discrepancy?
Well, it depends on what you mean by that word recession. So you can have a look at lots of different phrases for what is a technical recession. Some are all kind of coming across at the moment. But actually for CEOs and for corporates, what really matters to them is anything that is so deep and bad that it really does impact the ability of companies, the ability of individuals to spend. And that's something, again, that we've seen come through. It's actually a decent earnings season. Not a phenomenal earnings season, but a decent earnings season. It hasn't been in any way bad for companies. And I think that's the reassurance you're seeing from a corporate perspective, is that even if the indicators say that maybe you're more on the recessionary side of that soft landing, then they're not concerned because they see the spending both from a corporate level and CapEx and from a consumer level still coming through. And I think that's why you see maybe a discrepancy. And again, I always say it's the key thing. You have to focus on the earnings of these companies, which continue to be decent.
Continue to be decent, but if we go back to that consumer story, specifically in Europe, it feels like the best translation of that in the market shows up in bank stocks, and specifically when it comes to the periphery. Guy and I like to obsess, him about Italy, me about Spain, together. But together it really shows up, it feels like, in the likes of Unicredit, BBVA, Santander, et cetera, specifically on the loan growth story. But then we're talking about weakness on a macro level in terms of PMIs. What wins out?
So I think for the banks, it's very important to be selective. I mean, the other one I'd throw in there is Irish banks as well, are very interesting. So what is consistent about the banks? And the banks have had a fantastic year. It's an area that we still really like selectively. So you have loan growth. You have deposit growth. You have a strength in deposit betas as well. And I think people often obsess with the banks about rate cuts being bad for banks, but actually they went from negative to positive, 25 bips. They're very well structured, the banks now, and they're returning capital. Again, something I know that you love talking about. They are returning capital to shareholders as well. So selectivity in banks, whether you want to call it the periphery or not, really interesting. And also the beta for the banks is lower than historically it has been. Betas for banks have normally been very high, and they are still obviously a relatively cyclical name, but they're more defensive than they have historically been. And again, that's what the market likes, these more defensive, but actually in some ways quite steady companies. That's what you've seen because of the nervousness that Guy talked to as well. That's actually the kind of stocks and names that are doing well at the moment.
Well, I think, does that leave them a little bit more vulnerable, though? And I say this in the regards of, you say that maybe that interest rate story won't matter, but when you talk a lot of about these bank stocks and where they're being valued, it kind of feels like that net interest margin tailwind has been played out for a little bit now. And I think we talked about that last quarter as well in terms of the bank sector. But I'm curious then, does that just leave them very, very overexposed to trading volatility or loan growth or whatever?
No, I don't think so. The valuations still don't look hugely out of sync. You know, they're 6-7 times PE versus kind of more historic double digits. So I don't think that they have the exposure, that kind of nervousness. What the market is happy to pay for at the moment is any stocks in any sectors where they do see some consistency in the returns that those companies can provide. And I do think selectively that sector can continue to do so. So, no, I think there are other vulnerabilities on that nervousness side before you have to worry about the banks.
Are stocks going to do better than bonds for the rest of this year?
There's a big question. I mean, I think that it all depends on whether we go for 25 or 50 and where the Fed gets to. The bonds are priced basically relatively, for a relatively largish cut. They're priced for around 50 now. And I think that if tomorrow you end up with a situation where the Fed come out and say, actually, they're not concerned about recession or they're much less concerned than perhaps the market is pricing in, then I think absolutely equities will be the place that you want to be. But I say it every time, don't extrapolate where we got to in the first now 8 months of this year. It's not going to be like that for the next 4 months.
But do equities need 25 basis point cuts to go higher? And if they get 50 basis points, do they go lower?
Yes, I think they actually do. I think a 25 is perfect because what it's saying is everything is in control. We are pricing it. I think a 50 possibly brings back nervousness about recession as well. So 25 is what I would like to see in September, to be honest, Guy.
Okay.
Wow, 25 basis points makes that much of a difference.
Not because of the actual bips. I think this is what's important. It is the signalling. Everything right now is about the signals. And tomorrow, I think we have to get a little bit realistic. I don't think that Powell is going to come out and say anything that is going to move the market. I know we've been talking about it a lot. Exactly. I think he's going to be pretty much, we're looking at the data. We continue to be focused on inflation. We continue to be focused on recessionary risks. Yeah. But they're going to be playing in the middle.
Does that worry the market, though?
Yeah.
Does he come, if he comes out and says nothing, does that worry the market?
Is it like a credibility story?
Well, no, it's out. Yeah, precisely. Am I behind the curve? Is the Fed behind the curve? If it's not taking our fears seriously, is it behind the curve? Is there a danger that almost the message gets flipped?
No, I don't think so. I mean, I think he's smart enough that he will do it in a very sensible and very constructive way. Or we can continue to be focused on both sides of those data points. And I actually think tomorrow, not much will happen. I think he will come out with a statement that actually just reassures everyone that he's actually on top of what's going on, which of course he is. I think the key thing will be when we actually get that print and what that really looks like. And if it's not priced at that 25, if it's 0, that will be concerning because it will kind of signal perhaps there's worries on inflation that the market isn't. But I think if he comes out with a 25, and we saw yesterday with some of the jobs data. I mean, that again is a little bit of a worry that perhaps recession is there more than we think. But I think if he comes out tomorrow, I don't think we should read too much into it or predict much more. I think actually the flatlining we've seen this morning in the markets, I think that might continue for a few more weeks. And then maybe in September, things start to really kick off again.
Well, it also feels like signaling for November matters as well for a lot of reasons in the monetary space, but also, of course, we have that election coming up, which brings me nicely to, I think we kind of know what the Trump trade is, sort of, a little bit. What's the Kamala trade?
More of where we are at the moment. I mean, again, I think there's a lot being read into the Trump trade. I actually don't think there's as much in there as people think. I think that he is somebody who wants to continue to invest in the growth of the US, and that means that he wants to make sure that there are trades globally across the world. I don't think it's as in his interest to close any borders. So I actually think that everything in the US is much more middle of the line than people think from a political perspective. And this goes back to the point on the Fed. I actually think that what the Fed do and what the Fed signal, and any concerns or any signals that suggest that they are concerned about recession, that is a risk. Any signals that they are concerned about inflation, that is a risk. But anything that is more in this middle of the line, where we are at the moment, that means that earnings come through. And then, we have got some data points coming up when it comes to earnings. Some of the big tech names still coming. A lot of focus will still remain on what earnings look like.
All right, Hella Jewel, we'll leave it there. Amia, CIO for Fundamental Equities over at BlackRock, we thank you so much. So she was talking about the macro. Talk about the mega caps.
Okay, let's talk about what we're seeing here in Europe. Europe's core 6. Let's focus on what is happening there. These are the stocks that are performing this morning and doing some of the heavy lifting. And as you can see, largely they are higher, but not by much, as Helen was just saying. We are basically flatlining, waiting for a little bit of guidance, maybe waiting for Powell, maybe waiting for the BOJ as well. Let's factor that into our thinking too. Payrolls coming up next week, at the beginning of September, NVIDIA next week. There's a lot of things on our radar coming towards us right now. Okay, let's talk about some single stocks. Let's focus on what is happening outside of the core 6 here in Europe. Pharma is where Joe Easton is starting.
So we are starting with Pharma, Guy, and actually all three of these stocks listed are over in Copenhagen. So the big one, Bavarian Nordic, up another 10%, raising their guidance today, saying it will potentially hit the top end of their outlook. They've got this massive $700 million order from a country they haven't actually named, but it is, of course, the maker of the Mpox vaccine. So that's where that big order is coming from. I've also brought up Gubra. Now, this is exposed to the obesity drugs. They've got their own rival to Novo Nordisk, already up around 400% this year, though. Strong numbers, but only gaining another 2%. And down the bottom here, we've got GN Store Nord. Now, this is actually hearing aids, pretty steady area of the market in terms of being quite defensive, but they also do more general electronics for consumers, earpieces, that kind of thing. That is where they're seeing the weakness, the consumer business, the demand business. That is actually coming down at the moment. In terms of JD, we're up 2.7% on that one. They had a profit warning recently, but looks like the US is improving a little bit at the moment. And in insurers going the opposite direction. Now, Swiss Re, better than expected catastrophe claims for them. But Aegon in Amsterdam, they've actually got a bit of an impairment related to a restructuring. So that one's hit today, down 5.2%. And CTS Eventim, this is the events company, of course, reminding me of my recent visit to see Taylor Swift at Wembley. But Eventim, they run Hammersmith Apollo, that one gaining actually almost at a record for that stock in terms of the intraday gain, up around 8% at the moment. Then in terms of Deutsche Bank, this one getting a boost from news of this potentially better than expected outcome with the investors in Postbank, potentially saving them around 400 million euros in that debate over how much they should have paid for the business. So we're getting a boost there. CEO and some other executives are already talking about potentially some better than expected capital returns. That's what analysts are predicting as well, so that's a good one there. Then staying in Germany, but looking at HelloFresh, this one just hitting the wire, an activist investor taking a stake in HelloFresh. They're called Active, the investor doing that, actually up 6% almost for that one. So that's a big gainer today. So HelloFresh adding to the gains for Deutsche Bank, CTS Eventim, lots of movers on the screen today for you, Guy.
All right, Joe, I'll pick it up there. Thank you so much. Of course, we gotta cut down the Taylor Swift stock because we are getting some French PMI numbers crossing the wire at the moment. The services number coming in pretty hot, rising to 55. The forecast was just 50.3, but the manufacturing, surprise, surprise, is where we're seeing the weakness. 42.1 is the reading. The estimate there, 44.5. Right off the bat of that, you're actually seeing a jump. Euro-dollar strength, 111.56. Also seeing a bump in cable off the back of it, 130.97.
Is that the Olympics? Is that you? Is that...
It's definitely me. My paycheck went straight to France.
I wonder whether there's an Olympic effect in that. The services number looks very strong, certainly versus expectations. The survey was for 50.3 on the services line. It's jumped from 50.1 last time round to 55.
Yeah.
The Olympics feels like it could be maybe one reason for that. It's August. I imagine there's quite a lot of volatility around the August number, particularly with services, given tourism generally. But that looks like a big beat on the upside. I wonder whether that's a sustainable number. It looks out of kilter with everything else.
Yeah.
And the manufacturing line looks very bleak. But it does take the composite number to 52.7, which makes me wonder that actually the Eurozone number in aggregate, we've been concerned about whether that's going to dip below the 50, maybe stays above that line.
Yeah, it very well could. And when you just look at the numbers kind of underneath the hood here, and it could very much be the business effect or the Olympics effect, to your point, because if you look at new business, it looks like the rise is to 51.6. The estimate was 48.3 in July, so this marks the second month of expansion. But if you look at that by comparison to new orders in the manufacturing sector, falls, 37.1 versus 39.6. So again, it speaks to this idea that maybe it is that tourism bid that you are starting to see. Highest reading since May of 2022.
Yeah, that's if you click into the chart, you can do it on your Bloomberg terminal. You can see what's happening with the data. That is in terms of where that takes us back to kind of the highs we saw in 2022, nearly at the highs that we saw in 2022, and there's been quite a sort of sharp dip since then, below 50. We've been climbing out of that 50, i.e. the contraction territory since then. But this looks like a sharp acceleration to the upside, which it feels anomalous to me.
Could this be a problem? Is this a problem for the ECB if we continue to see this trend?
Maybe, but the ECB basically wants to, again, kind of... The ECB has got an inflation problem, which it's trying to manage. It's got a growth acceleration story which hasn't materialized in the same way. This will confirm maybe more on the growth side and maybe deliver a little bit more on that front.
Yeah.
Does this... I would be surprised if the ECB doesn't look through the 55 line.
Yeah, but a growth story on a kind of manufacturing makes up a bigger chunk of the economy. So that the weakness.
Services is a big chunk of the French economy. It's not like Germany. It's not so. So this is a significant number, but it looks out of kilter with the data
that we've seen
in the past, which is why it feels like a sort of an oddity. I don't know. We'll see what the analysis is. We'll talk to Carsten Bresky about this very, very shortly and get his take on what is happening here.
Well,
let's talk as well about what else is coming up. Deutsche Bank. We need to talk more about this Deutsche Bank story, actually. It looks like it's pairing its initial gains. I think that's probably worth taking kind of on board this morning. But basically, it looks like we're getting closer to reaching agreements with more than 80 plaintiffs. This is about Postbank litigation. This is about the acquisition of Postbank and what Deutsche should have paid for that acquisition. We'll get some details next. We'll get into the details of what is happening here and why we're seeing this upgrade to expectations. We'll discuss that next. This is Bloomberg.
what's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We're at 22 minutes into the European trading session. Seeing green on the screen, not by a massive margin. Eurostoxx 50 futures higher by 0.2%, seeing about the same margin across the continent as well. But one of the big movers that we are seeing this morning, and I say movers not in terms of margin of the stock, but in terms of kind of volatility you're already seeing, is in Deutsche Bank. Shares are in the green this morning, pairing that initial gain after saying it expects a 430 million euro boost to its third quarter results after making, quote, significant progress in talks over the majority of claims in Postbank. Let's get more on the story. Bloomberg's EMEA Finance Managing Editor Tom Metcalf joining us around the table. Markets are interpreting this as a surprise. Was it?
Yeah, it certainly caught me on the hop. I think this statement came out last night at about 9:30 p.m., 10:30 p.m. German time. And broadly speaking, it is a surprise because for most of the messaging had been like, these are long-running litigation. We're not expecting any progress. And then, boom, out the gate, Deutsche Bank saying that basically 60% of the claims that it provided a total of 1.3 billion for have effectively been resolved in actually quite favourable conditions for them. So that's why they're able to write back now 430 million. And the question is how much more of a boost they might get from the remaining 40% as and when they resolve them.
So this has been about the price paid for Postbank and whether or not they should have paid the initial price or whether or not they should have paid a price that they originally paid, that they ended up paying, and the spread between those two. So we've seen some resolution. Some of the claimants have settled, but what about the rest of them? What are they sticking with?
Yeah, it's interesting. So the reason partly this was a surprise was last week we had a lawyer for a smaller subset of claimants coming out and saying an offer of 36 euros a share or Postbank share was something like, dead on arrival, just completely unacceptable. And then this statement last night shows that Deutsche Bank has managed to settle with, a majority of these claimants at 31 euros a share.
Some were getting the 60s, weren't they?
Well, they were hoping to, right? I suspect there's a little bit of, hopefulness around that. But it's certainly positive because obviously by settling with what included the largest claimant here, that adds to pressure on the outstanding ones because, there's sort of a bar there. They might get a little bit more, but I think certainly hopes of, as you say, 60 euros seems very fanciful. Though, of course, every case is a little bit individual, right? So it sort of depends on the negotiation between the parties.
Does this affect the buyback story?
Yeah, and in fact, that's probably the most interesting statement out today is Deutsche Bank is saying, look, this will help us review our plan. They've basically said we are going to hit pause on buybacks. Now they're saying, because of this momentum, we're going to restart those talks with regulators. Traditionally, Deutsche Bank very conservative on this front, so I'm not expecting them to come out with, shock and awe type buyback. But that is all very positive, and that's probably why you're seeing those shares up 3%.
How big a chunk of the litigation risk in totality does this resolve when it comes to Deutsche Bank?
So it's about 80 or so plaintiffs representing 60% of the value.
Sure, but are there other
right. This is probably the biggest overhang. Look, there's always lots of legal risk. But no, this was the one where there was the most uncertainty. And I think part of the thing, again, coming back to the surprise, this 1.3 billion provision in April, that was also a surprise. So it was all these nasty shocks. And for the first time in a while, this has been a positive development for Deutsche.
Great stuff, Tom. Thank you very much indeed. He doesn't often get surprised, but this surprised him. Bloomberg EMEA Finance Managing Editor Tom Metcalf, thank you very much indeed. We've had the French PMIs. There was some surprise there, an upside surprise certainly when it came to services. We are waiting for the German PMIs to drop very, very shortly. Now, different kinds of economies here. One is services driven, so that's why the French services PMI print is so important. Manufacturing, obviously the key factor when it comes to what we're watching out from Germany, Chrissy.
We have that. Then we also got the Euro area flash PMI
coming up a little bit
about
later.
9 a.m. And then on top of that, the UK PMIs as well. So kind of a bit of an influx of what we're going to get. But I'm still waiting for this to show up in the trade because the reaction here was positive euro. We started off the show saying that might be the dislocation, and here we are, still looking at a 111 handle and climbing.
Well, it kind of confirms this idea that maybe Europe is doing a little bit better than anticipated. There has been the last set of data that we got on the PMIs told us the exact opposite story. It told us that actually maybe the growth was stalling, and that was a big concern, and therefore it maybe added in on what we were going to be seeing from the ECB. But that doesn't appear to be the case, certainly with the PMI data coming out of France. Anyway, the German data is going to be breaking very, very shortly. The expectation on the manufacturing front is 43.3, pretty much what we got last time. We will break that data for you next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg.
This is the opening trade, about 30 minutes into today's session. I'm just going to bring you the breaking news here. Getting that Germany data crossing the wire. August services PMI falling to 51.4. The forecast, 52.3. The manufacturing, again, another fall. PMI falling to 42.1. Estimate of 43.3. The euro just whipsawing off of that after that hotter than expected services data out of France, and then weakness in Germany.
This feels like a more consistent set of data. This is what we've had. This is what we continue to get. The French number feels a little off base as a result of the Olympics, but that manufacturing number, yeah, that's weakness. That's more weakness. That is decline. That is a number that may push the ECB to do more. The services number also declines fairly sharply, I would argue, as well. Now, remember, these are diffusion indexes. They tell us kind of it's a rate of change story, but the composite number of 48.5, maybe, as you say, offsets that French number, brings the kind of the 50 line back in play for the composite Eurozone number. It's going to be interesting to see whether which side of the 50 we end up on in terms of that story.
Well, I'm just looking at the bond story as well, because you are seeing a far greater reaction, no surprise there, on those French bond yields, down about 7 basis points. Germany, though, down 4 basis points. The UK actually a little bit higher when you look at those 10 years. So some whipsaw action. We still have plenty more data to go, though. We've got Euro area PMIs, 9 a.m., got negotiated wages. We got the UK PMIs as well. We are not done with the breaking news.
We certainly are not. Carsten Bretsky joins us now, Global Head of Macro at ING Research. Carsten, in aggregate, we've had a weak German number. We've had a strong French number. It looks like that was Olympics influenced. Walk us through your take so far.
I think Olympics beats football, Guy, in all honesty. Indeed, the services number was mainly driven by the Olympics in France, but Germany did not get any positive impact from hosting the European Football Championships. Overall, this is a grim PMI reading, especially the German one, because we see that the German sentiment has been dropping now again for a couple of months in a row. Optimism has completely disappeared again, and this shows that the ECB will clearly have to rethink how to balance its reaction function. We know that they're mainly still focused on inflation, on wages, but with this further deterioration of the growth outlook for the entire Eurozone, I think the ECB will definitely have to continue cutting rates, and they will have to put more focus on how to restore growth in the Eurozone.
I'm just reading through Chris Williamson's line over at Market, who puts this data together. As for prices, and he's talking about the German line here, as for prices, average charges for goods and services rose at the quickest rate in 6 months. Carsten, does the ECB have a problem with that? You've got a slowdown in terms of the headline numbers that I'm seeing on the screen, and we've referenced already, but average charges for goods and services rose at the quickest rate for 6 months. Is that going to make September a difficult choice for the ECB?
Yes, to some extent, because it makes the entire macro surrounding in Europe a bit more stagflationary. And we've seen that these selling price expectations have started to come up again for the entire Eurozone, not only for Germany, already last month. So this is clearly bad news for the ECB. When you also look at, for example, current union demands in Germany, where we will have more upward pressure on wages, not only this year, but I think also next year. This stagflationary environment makes it hard for the ECB. But if growth disappoints so much, I think that the ECB will have a closer eye on growth and the Eurozone economy than they had over the last couple of months, meaning they will continue cutting rates in September.
Can you walk us through that negotiated wages question, though? I mean, just put this into context for us. How much upside are we talking about here?
It's a tricky one because the numbers tell so many stories, because they are blurred by these one-off inflation compensations we had in a couple of European countries over the last year. So we still have a lot of base effects going up and down. So I think that the Eurozone, when we get the ECB Eurozone wage growth later today, we will see that wage growth has come down in the second quarter of this year. But looking at the German numbers we had out 2 days ago, we saw that just the collective wage agreements in the second quarter actually accelerated. And I think this is a number the ECB will be looking much more than only at headline wage growth. So there is still a lot of inflationary pressure in the pipeline, and this will at least make the hawks at the ECB have, maybe already some sleepless nights.
Well, Carsten, let's compare that to what we're seeing over in the States then as well. It feels like for a very long time, this diversion between what the ECB and the Federal Reserve was going to do was almost fueling this euro-dollar trade. I want to ask you about the FX here, but I'm curious, is it a positive sign that the ECB and the Fed seem to be on the same page?
They are on the same page, but not entirely, to be honest. Because I think for the Fed, it is easier, because the starting position for the Fed is easier. Interest rates, the Fed fund rate is higher. So it is easier to start with a couple of rate cuts in order to give some support to the economy. In Europe, the situation is more complicated, because we see that inflation is stickier than the ECB had hoped, that also the recovery at the same time is a bit more sluggish than the ECB had wished for. So I think the ECB is once again in a more complicated situation than the Fed, in all honesty. So for the Fed, it's more straightforward. Cut in September, continue cutting. For the ECB, we will have to see whether they will actually be able to switch and give a bit more emphasis on growth, and then they would also continue cutting rates.
Yeah, just come back to that inflation story. This is the German data. This is the German statement on the price front. This is from PMI. August flash data indicated an acceleration in the rate of output charge inflation to the quickest rate since February. So we are seeing a pickup there in terms of what we're seeing out of Germany. And if I come back to the French data on the growth side of things, Carsten, talking about what is happening with the services line, the one-off nature of this boost is evident in the worsening employment situation, weaker output expectations, and declining backlog of work. Carsten, what does the next French number look like down the road? Do we get is there an equal and opposite reaction in the French data next time round? What do the September numbers look like, do you think?
Well, the September numbers in France should definitely bring us a weakening of the services PMI, because this had been a one-off due to the Olympics. We will clearly see a big drop in the services component. In terms of manufacturing, I have been hoping for a bottoming out of this manufacturing weakness across the Eurozone, but already for a couple of months. It can still happen, because you look, inventories are extremely high, and it doesn't need a lot of new industrial orders coming in either country in Europe to see also PMI and sentiment in manufacturing improve a little bit from the current levels. So we will see a bit probably a reshuffle, weaker services, somewhat stronger manufacturing.
If the US economy rolls over, how much worse could the European data look?
Much worse, Guy, and you know this. The US is such an important trading partner for Europe. For Germany, for example, 10% of German exports go to the US. And the US is now really the most important trading partner for Germany. So if the US was to slow down, and whatever it's going to be, a soft landing, a hard landing, Europe is going to feel it. We know a typical reaction in Europe. The typical reaction starts with policymakers saying that we are completely independent in Europe and we will not be hit by anything that's happening in the US. And then we'll realize 3 or 6 months further down the line that everything that is happening in the US economically will also have an implication on European growth, which means it's not so much a story for 2024, but it will be a story for 2025. And if then the Eurozone recovery would not come in 2025, this I think should be then the moment in which we will really talk about more aggressive rate cuts by the ECB, because there will be a moment in which the ECB has to say, all right, as long as inflation is somewhere between 2 and 3%, that is fine. Let's focus on restoring growth.
Carsten, I really want to talk about deficits and the doomsday stories that I imagine are going to hit the wire over the next couple of months, starting with France in September. I'm meeting some of those EU budget deadlines. You've got Spain, Italy, October, November. Does the ECB need to pay attention to that? How much of it is an issue? If not pay attention to the deficits, then pay attention to the market reaction off the deficits. How do you interpret that?
It is not a doomsday decision yet, in all honesty. I think it is a test case for the new fiscal rules. Remember, we had this reform of the Stability and Growth Pact, and now we will see whether this actually is going to work. What the new rules mean is that the European Commission, together with the individual states, will have to come up with a so-called adjustment plan. So an adjustment plan over a couple of years that will bring down these deficits, that will make debt more sustainable. And we will now see in every single case, France, Spain, Italy, whether there is enough commitment and also willingness at the country level in order to get these paths done. I think the good thing is we will not get this hysteria shock that we had in 2010 and 2012. But of course, these fiscal rules, these European rules, will only survive if they're embraced by all member states. If they don't, we can just simply forget about them and throw them in the dustbin.
But to your point, perhaps not doomsday events, but the market certainly panicked off of that. I mean, those snap elections in France largely was a reaction to the deficit concerns there and the spending story. But I'm curious why the ECB may or may not be paying attention to it. I mean, when we did see that panic, the volatility in the bond market and those spreads that still haven't come back, there was questions of whether or not the ECB would intervene. What does that bar look like for potential intervention in the future?
I think absolute bond yield levels are still far too low in really to be worried. Neither I'm worried, and I also think that these levels are nothing that the ECB is really worried about. If bond yields were really to increase, if these spreads were to widen, and if we were to get back to levels which we saw in 2010 and 2012, then the question for the ECB will be whether they are willing to trigger this TPI program. And the ECB always said, and that is the tricky thing, the ECB said the TPI program will only be triggered if a country complies with all European rules. So a country needs to comply with these fiscal rules in order for the ECB to start buying bonds again. We're clearly not at that point, and I think we're far away from that point yet. Of course, we know, and Europe is not alone. Other countries have similar issues. We see increasing government debt levels. We see in government debt ratios, which will mean that it is hard for European countries to do this investment, this additional investment, in order to get growth back and to get the green transition done, and at the same time combine it with solid and sound public finances.
Carsten, great stuff. Always a pleasure. Thank you very much indeed, sir. Carsten Bresky, Global Head of Macro at ING Research, joining us. As Ollie Crook points out, we began the day pricing in a 60% chance of a ECB cut in September, 25 bips. The market's now pricing in a near 99% chance of that now happening on the back of the data. But I will just, the wrinkle is the inflation story. You need to read what is coming out of the statement this morning on the PMIs from S&P Global. It's really interesting on the inflation front. Let's turn our attention back to the corporate news next. A conversation with the CEO of Bavarian Nordic. His outlook on the production of an Mpox vaccine. We'll get you an update out of Johannesburg as to what is happening with the situation in Africa right now. I say in Africa, this is a broad swathe of southern Africa that is being affected by what is happening here. We'll talk about all of that next. This is Bloomberg.
suppose I want to buy a computer, but I want to have AI in my computer. I want to be really up to date. Do you have AI in your computers yet?
No, not yet, but is coming soon. And we think this is going to be one of the largest transformations in the PC industry in decades. What will be possible starting this summer is to run large language models in AI PCs, which means that what today all of us are doing in the cloud, where you use any of the applications that you can, you will be able to do it locally. And what this means, which is why we think this is important, is it will be much better from a cost perspective, because running models in the cloud is expensive. It will be better from a security perspective, because you will be able to use the model with your own data locally without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, too?
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup.
This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
It's a very unstable and blurred picture right now in Africa, but what we can expect and must expect actually is more sporadic imported cases to the European continent. So we have to be aware of that. We have to be prepared. The member states, the surveillance systems, the medical facilities have to be prepared. But final sentence to this, it's not the new COVID.
Pamela Rendi-Wagner, Director General of the European Centre for Disease and Prevention Control, speaking about what is happening in southern Central Africa with the Mpox outbreak. Scientists are rushing to the region. They're trying to stop the mushrooming outbreak spreading even further. They're finding a complex mosaic, basically, of infection patterns that are difficult to discern, and they're trying to figure it out. Strains are spreading both through close human contact and by handling of animals. Our chief Africa correspondent, Jennifer Zabajaja, joins us now. What do we know? What is the latest? We're getting more and more we're getting a greater understanding of what is happening, but are we getting the full picture at this point?
You know, Guy, I think officials are still trying to find out. I mean, we just heard there, and we've heard this time and time again, that no, this is not the new COVID, but just in regards to the the mutating variants, and also just how aggressive we're seeing this disease spread, some officials and experts are saying it is spreading similar to what we have seen with Ebola and COVID in the past. And potentially, as we did hear there again, we could see some sporadic cases popping up internationally as we are seeing. But on the ground in the DRC, we have seen cases, as you were mentioning, spreading through close contact, in some cases spreading through sexual contact. There was concern about children and the impact that Mpox has on children. At this point in time, what we're finding is children are mainly being infected by the less concerning variant. 80% of cases for children are those of the less concerning variant. And really the concern is this mutated strain, the Clade 1B, and potentially its impact on people with that. And so, you know, the question is really going to be testing and how officials and experts are going to be able to continue and keep up with the testing as we're seeing the strains mutate and really affect people in different ways.
So, Jen, Bavarian Nordic, it's one of the only makers of the approved vaccines. They actually reported earnings this morning, shares skyrocketing, higher by about 11%. Can you walk us through the numbers, through the guidance we're getting from the company itself?
Right, and Kriti, even before that, we've seen Bavarian Nordic shares really climbing through August. We did get some guidance from them on Wednesday just about what their expectation is. They did tell us that there was an undisclosed European country that was able to request some vaccines. That is then going to help them reach the top half of their target. But more broadly, you know, they talked about how they have been working with authorities globally since the last Mpox outbreak. And have tried to figure out ways in which they can be a provider. They said, and I know you'll be speaking with the CEO soon, but they may be able to distribute at least 10 million doses by the end of 2025, maybe 2 million by the end of 2024. And it's important to note that the vaccine doses that they have are mainly focused on adults, and they're looking to focus in more on children.
Jennifer, what are other countries doing? Are we seeing borders being closed? How are other countries reacting in the region?
The interesting thing, Guy, that we've really been hearing, I mean, we heard from the Africa CDC actually earlier this week saying that they don't want to see mistakes from the last pandemic affecting what the response is at this point in time. And in particular, just to your question, the impact on borders. We heard the African CDC chief say this is not a response that needs to constitute closing borders, but potentially changing behaviors. And so that is where they continue to bring it back to understanding more of how this transmission is working and potentially then educating people on changing behaviors and how things need to work on the ground. But at this point in time, we are seeing in Africa almost 19,000 cases in 2024. But we need to remember that Mpox has been around for quite some time. It is just these new strains that are really keeping public health officials on their toes and wanting to address it, especially on the continent and even more so more broadly globally.
Jennifer, thank you very much indeed. Jennifer Sebazajo joining us out of Sandton, out of Johannesburg, talking about what is happening in Central and Southern Africa. We greatly appreciate it. We're going to be talking to the CEO in just a moment. We're just fixing some wrinkles in terms of the technology to make that happen. But I think, Kriti, some of the key things that are happening here are, A, they need to figure out a way of clearing this to be treating children. Yeah. I think that's one area. Jen's talking about the fact that actually this is that mainly children are being affected by the less concerning variant, but nevertheless, we need to get the vaccine maybe cleared. And what does Bavarian Nordic do? The emphasis at the moment is on orders coming through, but even if the orders don't come through, do they start ramping production now in anticipation of those orders coming through? And then at least we have the capacity to deliver in size what is required into the region.
I'm curious how much, and there's obviously a concerted effort to not compare this to the COVID pandemic because we're not at those levels yet, but there is a roadmap on how to do this from the pharmaceutical space, from the likes of Pfizer, from AstraZeneca, from Moderna, in terms of, to your point, do you wait for the orders, but also where do the orders come from and where do you prioritize? What regions do you prioritize? Because that was one of the criticisms that came out of Pfizer and AstraZeneca, respectively.
There's also a logistics challenge that works all the way around this as well. What do we learn from COVID in terms of distribution? I think
refrigerators, remember, used to be the thing.
Yeah, exactly. How do we get the distribution to work? Do we need to put, does Bavarian Nordic, does the pharmaceutical industry send people who are good at this stuff, who have learnt the lessons, to maybe make sure the logistics works and works well? Do you give one dose? This was, again, with COVID, some of the kind of, is it better to give everybody one dose, or do you need to give the kind of the sequence? Do you give one dose? I understand that one dose gives quite a lot of protection, so do you just give one dose in terms of how this works? Let's try and get some answers to this question. Paul Chaplin joins us now. He is the CEO of Bavarian Nordic. Paul, thanks for bearing with us and thanks for the patience. It's an interesting conversation. Look, there's a bunch of questions. We've just run through some of them. The first one I want to ask is, you've indicated you've got a big order coming through from Europe. You still have a lot of capacity to send to Africa. Do you start ramping production for the expected orders to come through now, or do you wait for those orders to come?
Yeah, that's a good question. We have to make decisions very, very soon if we're going to be able to deliver the capacity of the 10 million doses by the end of next year. We really need to make some trade-offs and some key decisions. So that's why we're talking with all the stakeholders and really trying to understand what the real demand is going to be. But most likely we will have to start ramping up production and moving over to our Mpox vaccine very shortly.
So, Paul, that's the production side. Talk to us about the delivery here. How quickly can you speed up the delivery? What does that even look like?
Well, we have doses available right now, and the recent order that we secured through HERA, which is the EU, for 175,000 doses, we're actually discussing right now where to ship those to the DRC as we speak. So hopefully very soon, later this month, doses will start to arrive. For the remaining doses that we have on stock, we really need orders, but we're ready to ship significant doses when we get those orders. And as I said, we have a huge capacity for the remainder of this year, up to 2 million doses. And we're just waiting for those discussions with the key stakeholders to see where those doses need to go.
But you don't start a big ramp up without those orders coming through, is the message I'm getting here, Paul. Is that correct?
That's correct. We actually manufacture other life-saving vaccines, so we need orders before we can really ramp up.
And you're not switching over. You're not temporarily delivering a hiatus for some of those other vaccines in order to produce some of this vaccine. That's not happening yet.
No. So we have a production line for our Mpox vaccine. We are producing doses for the orders we already have. To ramp up really takes a shift in resources and capabilities. We're looking at doing that. We can do that. That's how we will be able to deliver the 2 million doses. But really, we really need orders before we can move.
Paul, very quickly, talk to us about localizing some of that production, moving some of that manufacturing ability to Africa. Where are we on that?
Yeah, so through the Africa CDC, we're talking to up to almost 7 different companies in Africa. It's always challenging to move manufacturing, but it's clear, depending on how this outbreak develops, we may well need to expand our capacity, and local production is always the key. So we are in discussions. Hopefully we can finalize those discussions in the coming weeks and then start really transferring the manufacturing. But it will take time.
All right. Paul Chaplin, we'll leave the conversation there. CEO of Bavarian Nordic, we thank you so much for joining the program, giving us an update on the ground, that production and delivery story. Folks, the Pulse is up next. Stick with us. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
European stocks edging a little higher. Central bankers from around the world arriving in Wyoming. It is day one of the Jackson Hole Conference. Much more still to come. French services expanding at the fastest pace in more than 2 years. It's Olympic related. Basically, visitors flocking to Paris for the Olympics. Bund yields under a little bit of pressure. German PMI data doesn't look that clever this morning, missing across the board. And Tim Walz formally accepting the Democratic nomination for the vice president, playing the everyman and card and basically targeting very much swing voters. So those are the headlines. Let's talk about what is happening with the European story this morning when it comes to markets. The picture basically one of sit on your hands, wait and watch. The PMI data have confused things a little bit, but basically you are looking at a story of data that are telling us that the European economy is kind of going sideways, maybe a little softer, and that comes through now in terms of the data that we get from the euro area. Euro manufacturing PMI falling to 46.5, the estimate 45.8, so a little softer there. The services line coming through at 53.3, so that's been skewed for the French data, which brings us through, therefore, with a number of 53.3 versus a forecast of 51.7. They haven't put the composite number in. I want to know what the composite number is. So somebody's going to tell me in my head what the composite number is, because I want to know whether that's north or south of 50. We'll get that data for you in just a moment. Anyway, we've got a lot to talk about, so let's get into it.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, welcome to the show. This is The Pulse. I'm Guy Johnson. Fran is off today. She'll be back very soon, but you got me for a few days, so settle in. Let's try and figure out exactly what's happening with the Eurozone data and try and give you an idea what that composite number looked like. 52.2, so that's a much better than anticipated, and that's the France data. Excuse me, that's not the data I am looking for. So the Euro area composite PMI rises to 51.2, the forecast 50.1, so we're north of 50. I think it's been largely skewed by the data coming out of France on the services side, which looks completely Olympic related. Ollie Crook joins us now out of Berlin. Ollie, what do you make of the numbers?
Yeah, Guy, let's just recap what we got out of the Eurozone after we got those numbers from France and Germany. So manufacturing down at 46.5, which was a miss, but frankly, Guy, a much lighter miss than I had anticipated, just given how poor the manufacturing numbers were in Germany and France, and we'll go over those in just about a second. Services came in at 53 for the Eurozone. That was a beat. And as you just mentioned, Guy, that dragged the full composite up to 51, which was also a beat. A little bit more activity in the sort of terms of the composite. And services, as you say, though, with that big skew from the Olympics, which will take us to the French number where we got that services number. We were expecting 50.3. It came in at 55. That was an absolutely monster print. I guess the market's not that great at sort of modeling the impact that the Olympics could have on an economy, which is, fair enough. When you look at the German side of things, again, you had a miss on services. That is sort of a surprise because, we know the manufacturing story has been very poor. But when you look at that manufacturing number, Guy, when you look at the PMI out of Germany coming in at 42.1, that is not what you want to be seeing in the German economy, the absolute powerhouse of industry within Europe. The expectation was for 43.3. Guy, that just notches another month of contraction for German manufacturing. We're down, I think it's now 26 months of consecutive contraction within the German economy. Also a slowdown, but as you were mentioning, Guy, slowing growth, rising prices. That is a dynamic you do not want to see over at the ECB.
Yeah, it's interesting the football didn't have such an effect on the German data, but the Olympics did have a big effect on the French data. I don't know. Pay your money, take your choice on that one.
Yeah,
the inflation story, I think, is I think, yeah, they've taken the big goal down behind you. On the prices front, I think it's really interesting. Let me quote from the S&P press release. On the price front, August flash data indicated an acceleration in the rate of output charge inflation to the quickest since February. Ollie, how does that confuse the picture for the ECB?
I mean, fundamentally, if you look at the market pricing for what we were expecting out of September today, I mean, we woke up today and there was a 65% chance of a rate cut of 25 basis points in September by the ECB. That's what the market had anticipated. Later in the morning, we're now at a 99% chance of a rate cut in the September meeting. And remember, Guy, Lagarde said it herself back in the July meeting that September is wide open. And frankly, all of this data doesn't really clarify it, I think, a huge amount. I mean, obviously, we'll be watching very closely next week at the CPI data that we're getting out. We're going to get also that really key data in terms of the wage negotiations. And remember, in the first quarter, wages sort of rose by the most that they had in about 30 years. So when you think about the purchasing power within the European economy that could feed into sort of increased inflation, it's going to be a major concern. And let's also not forget when we have Germany's again a problem on inflation. Commerzbank has been saying that they think that actually the price is coming down in Germany. That has stopped for the coming months. So you really have a real debate ahead of you at the ECB, particularly from the hawks in Germany.
Yeah, we're going to get that wage data, indicated wage data from the ECB a little bit later on. We'll pay a lot of attention to that data. Ollie Crook joining us in Berlin on this PMI data. Remember, we also get the UK data at past. I will bring you that data. What is that going to tell us about the UK economy? Is it in a different place right now? Ozan Tarman is the Vice Chair of Global Macro at Deutsche and joins us now. Good morning.
Wonderful to be here, Guy.
Nice to see you. What do you make of the numbers?
I think the big motto of this year remains recession hawks and inflation bears will both continue to lose. I think we are in a good place. Obviously, there's a bit of Olympic spirit versus Euro football. German numbers weren't great. French numbers carried us. I think market is right on that 99%. That cut is coming, September cut. In fact, coordinated cuts are coming. Maybe it would have come in June, July. We can discuss that. Maybe Fed should have cut in July. But now central banks are in a good place, and they will start giving those cuts.
Does the growth picture out of Europe justify 50, but the inflation picture subtracts 25?
Very well put. And I think they want to go 25, so they will jump on your they will jump on your gray area. A bit similar in the US. You know, we talked about this before. Last year, even in the beginning of January, all these 6-7 cuts priced in, exaggeration. Then all of a sudden, because of owner equivalent rent, a questionable factor, pushing it all the way to December, the cuts, mostly in the market. I think that was also exaggeration. Then something happened in August. All of a sudden, we panicked. 50 basis points cuts everywhere, 103 being priced. I think if I wasn't on the EG&C in the beginning of August, I would just say, calm. I think they just want to go 25. I think they're on the right track to do so.
Where does that take us? 25. Where does ultimately...
I do agree. It's a good place to agree with your chief economist. I do agree with our Matt Duzzetti's revised view now. That is where we are. 25 each, September, November, December. By the way, remember all this, they shouldn't cut in, they shouldn't and won't cut in September. It's too close to the election. All of this is a bit urban legend. They will, and they can cut in September. As for ECB, Deutsche call, Mark Wall's call is a skip, September and then December. We shall see. We shall see how inflation goes. Again, you were on the right place. Wages this afternoon, important. How does that play out with the PMI headline? That's very key for Madame Lagarde. But I think their intention is probably to go indeed 25 and then skip and do another 25.
What's having the greatest effect on Europe right now in terms of the economy? Is it what is happening in the United States or is it what is happening in China?
Very good question. Probably a combination. Stuck in between. That's why for a long time people were very concerned, rightly, about Europe and about Germany. But at the same time, see the resiliency. Because of that, partially because everybody was so bared up, Euro continues to trade on the resilience side. In June, in one of our Frankfurt macro conferences, I did poll the room, almost 200 clients, and maybe 190 was in. And Guy, 189 hands went for 103 euro before 110. And you see where we are now. So that shows you what the pain trade is. That shows you the frustration trade. And that shows you why
is it an unwind of the Trump trade? Is it there's a bunch of factors here.
That's one of them. Definitely. Another big change since most of us left for the summer vacations is that Kamala Harris is doing so much better in the polls. First of all, Kamala Harris being in the race. 4 weeks ago, we were talking about the red wave, steeper curves, 60% lightizer tariffs everywhere, dollar going to 103. All that stuff is now being unwound, and it's having an effect.
Let's talk about Jackson Hole. Well, let's talk about the data yesterday and what we learned from the minutes, and then let's talk a little bit about Jackson Hole. I read the minutes last night.
Dovish.
They really lent dovish. I read them twice. I was kind of the initial bit. I'm really surprised at how dovish they lent. And then you've got the wage data as well out of the States, which is bigger than anticipated in terms of the revisions that we're going to get coming through. Why don't those point to us edging towards a 50 basis point cut in September?
Good question. First of all, I think that the dovishness, I completely agree with you, dovishness of the Fed minutes shows the convincing power of Mr. Powell, who was in the right place when everybody got too doved up, 6-7 cuts. Then only in December, the guy stayed in the balance, and he was right. So now the market is coming more his way. We will definitely leaning more towards caring and focusing on growth rather than inflation. So starting with even claims today, every claims number is now like an NFP number. If claims indicate bad, lesser jobs, certainly if NFP brings another bad surprise, then more 50 will be priced in. If we get inline numbers, then he wants to probably get away with 25 and not to give the market
what does your gut tell you? Does it tell you that last print was an anomaly? It felt like it was maybe hurricane affected, maybe it was a little worse than anticipated. Did it feel like it was consistent with the rest of the data?
There was hurricane effect, but my gut feel tells me that thank God for those revisions, right? Because that was always the mumbled truth. We can also discuss that, by the way, 818, some people getting it 33 minutes earlier, all that stuff. But I am not going to, all this backward looking, don't focus on it too much stuff. I think it's the losing bear camp talking. It's important when Kamala Harris and Walz lose another 1 million jobs. That's important. That's on the back of their mind. That's on the back of Jay Powell's mind. So my gut tells me the guy wants to go 25, 25, 25. But if there is any bad surprise, this time that we can't blame on hurricane, he may even go 50.
What is he going to say tomorrow? Does he say anything tomorrow? And is that okay?
A victory speech in an understated Powell way. No, victory lap without...
It's a victory speech.
Victory lap without the whole Mediterranean celebrations. But market is coming his way. Now we're convinced with 25. Even the Hawks, Kashkari, everyone is, maybe we take some Bowman, are indicating 25. So he can take that 25 and move off the table. But he's not going to push the drum too much. He's going to say he's going to continue to watch the data, because remember what we were fearing again 2-3 months ago. Inflation will surge back. The next Fed move, maybe some very credible names. The next Fed move, maybe an hike. All that stuff turned out to be completely wrong. The guy turned out to be right.
The market has got the Fed horribly wrong this year. I think we can take that. Europe looks like it's a sort of paradigm of virtue in terms of its ability to have some consistency in terms of expectations. The US has been.
If they just listened to Powell, they would have done better.
Maybe so we should be listening to him tomorrow, I guess, is the message. But if he just pushes the data dependency line and just says, we are going to remain data dependent, is that going to be enough? Is that going to be enough to soften, kind of calm the market down? Because any hints at 50, and I'm wondering if the market says, actually, maybe they see bigger concerns than we do. Any hints that maybe actually we don't need imminent rate cuts, the market's going to go, what are they seeing on inflation? Like it's a tight, narrow path that he's got to navigate tomorrow.
I completely hear you. That's why whatever he says, I think, as of today, I think we're going to go away with 25 and not 50. That we might take as an opportunity to take profit on some of these trades that have been working unbelievably well since August 5. What a surge in Nasdaq, NVIDIA coming next Wednesday, the surge in Euro. So maybe that just 25 perception, people will take as an excuse to take profit on short dollar positions, maybe on the received rates positions. But we're very fragile to, as I told you, any miss on the lower on the growth side, on the NFP side, then we will remember August 5. Another thing we should talk about, carry trades. That was another big factor on August 5, what happened in August. So
they're telling me that I've got to wrap this conversation up, but what do you expect from the BOJ tomorrow? On Friday. Tomorrow's Friday.
They're not going to make you too nervous, so they will remember what happened. So no big hints of any hikes coming anytime soon. Market is coming their way. If this continues, if the calmness on U.S. rates continue down the line, they will hike again. So all of us, we're changing. The rallies on dollar yen is a sell. I still believe in the yen.
You still believe in the yen, and the fragility continues there as well. It's all on a knife edge. Ozan, thank you very much indeed for coming to see us.
Always a pleasure.
Nice to see you. Ozan Tuman, Vice Chair, Global Macro at Deutsche Bank. Thank you very much indeed. What are we going to talk about next? We're around 15 minutes away from UK PMIs. We'll focus on that. The maker of one of the only approved Mpox vaccines telling Bloomberg that his company is responding to the outbreak in Africa. We're going to find out how next. That conversation coming up. This is Bloomberg.
Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
To ramp up really takes a shift in resources and capabilities. We're looking at doing that. We can do that. That's how we will be able to deliver the 2 million doses. But really, we really need orders before we can move.
Paul Chaplin there, the CEO of Bavarian Nordic, the Danish supplier of this key vaccine against Mpox. Shares moving higher today. The company reporting revenue last night and second quarter estimates. The revenue was the second quarter. The estimates, obviously, for the full year, the estimates were above expectations, basically confirming those. Obviously, we're talking about the story in Africa as being significantly related to this. Scientists there kind of rushing to stop the Mpox outbreak in Central and Southern Africa. They're finding a difficult situation, a kind of complex mosaic of infection patterns, different strains affecting different demographics as well, which is critical. You've got different infection routes. Bloomberg healthcare reporter Janice Q joins us now. Janice, we've just heard from the CEO of Bavarian Nordic, the maker of the vaccine. The business is responding at the moment. It is ramping up, but it's waiting for these orders to come through. When is that going to happen? When are we going to start to see these big orders coming through that means that they can really start to crank these things up?
So Bavarian Nordic has the capabilities, they have the inventory, and they actually already started stockpiling a vaccine after the last mpox outbreak that we saw globally in 2022. They do need to, as you say, get the orders, and the Africa CDC, along with other partners like Gavi, the Vaccine Alliance, are working very, very hard, and the WHO are working very hard to get this on the ground. Africa CDC spoke to the press earlier this week, and they said it would be a matter of days. I think the longest time frame on the initial orders hitting the ground is by next week.
What is the latest in terms of how quickly this is spreading? And it was really interesting. I was talking to Jen Sabazaja a little bit earlier on. She was saying that actually you're getting different strains affecting different demographics as well. The children look like they're being affected by the lesser concerning strain, but others are being affected by this newer mutation. Just walk us through the kind of dynamics of what is happening here.
So Clade 1, which is the more severe strain, is endemic to the Congo Basin. And it's been spilling over for decades, actually, but with increased frequency. And that is where most of the children are being infected, is with the Clade 1A. Clade 1B is this mutated strain that the scientists and virologists on the ground have very little information about. And it is what is fueling the current rise in numbers. There's been sustained human-to-human transmission of this Clade 1B. It is seeing in adults, it seems to be spreading faster through sex workers, and this is exceptionally concerning because that spread can move quickly.
Janice, thank you very much indeed for the update. Janice Q joining us out of Santon on what is happening with the latest in the region and how the mpox vaccine is spreading, but also kind of how quickly we can ramp up in terms of the production story around getting the vaccines out there. Coming up, we are going to need to talk about what is happening with Deutsche Bank as well, one of the stocks that's very much on the move this morning, reaching a key agreement with claimants regarding the acquisition surrounding Postbank. We'll dig into the details of that story next. It's been going on for quite some time. Deutsche Bank's on the back of it this morning. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Deutsche Bank stock up 2.1% right now. This after the bank said last night that it expects a 430 million euro boost to its third quarter results. This comes after making, quote, significant progress in talks over the majority of claims relating to the Postbank litigation, which relates to the price that was paid, and some investors believing they got underpaid in terms of that acquisition. Joining us now, Bloomberg's EMEA Finance Managing Editor, Tom Metcalf. Bit of a surprise.
Yeah, caught me by surprise. The messaging coming out of Deutsche Bank before yesterday night when the statement dropped was these things will take time to resolve. We're working away, but not expecting any kind of big shifts. And then last night, bang, this represents about 60% of all the post-bank claims. Yep. And to my reading, it looks like Deutsche Bank done a pretty good job. They provided, about 800 million for these specific claims, and they've been able to kind of write back 55%. Right. So they effectively. Is
there an expectation they'll be able to settle all of them at these kinds of levels?
I think it's always more complicated than that. That would be how my simplistic brain would go with it, right? And but yes, the guidance we're hearing is, look, every claim's different. And for me, the fun thing is, as a lawyer representing a different set of claimants out there who's already been saying that a settlement at 36 euros is unacceptable. This was at 31 euros. So there's a big range out there, and that would be beware going forward. The rest of this provision, that's the question. Will they be able to do it at 45%, or do they have to go a bit more richer to satisfy other people?
I'll be interesting to see it. There's a statement out this morning on buybacks as well, which they're kind of re-examining. Tom, thank you very much indeed. Finance Managing Editor Tom Metcalf. Up next, you've got UK PMIs about to drop onto the tape. We'll bring you those numbers, and we'll bring you some analysis. That's next. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
29 minutes past the hour. Good morning. Welcome back to The Pulse. I'm Guy Johnson in London. Francine is off today. Let's talk about kind of where we are in terms of the top stories that we're watching. The European stock's kind of drifting a little bit, to be honest. We're waiting for the sun to come up. That may be not a live picture you're watching from Jackson Hole. The sun's going to come up on day one of Jackson Hole conference. You're going to see a lot of speakers today. Central banks very much in focus right now. They're going to be reacting as well to some of the data that we're watching. Euro area getting a bit of a boost from the Olympics. Certainly that was the French PMI data. That was quite strong, but the German numbers are pretty grim. The growth story looks pretty bad. And what makes that worse is the fact that you've basically got a tick up in inflation coming through, it looks like, out of Germany, and that's going to be concerning to the ECB. Over in America, back again, Tim Walz formally accepting the Democratic nomination for vice president, playing the everyman card, basically targeting swing voters, talking about unity. So that's basically what you need to know this morning. But the real standout story thus far has been the data, and we now get the UK data coming through. So let me just run you through the PMI numbers that we are now getting. So the headline number, the manufacturing number, comes through at 52.5. That's a little better than anticipated and a little tick higher than what we got last time round. The services number of 53.3 is better as well. So this is painting a picture of a UK economy that is doing better than anticipated and actually certainly confounding some expectations of a rollover. So that takes the comp number to 53.4 versus 52.8. So actually, and remember, this is a diffusion index, so this is kind of versus what we saw last time. So relatively things are improving. Let me just see if I can refresh my PMI releases page on the PMI page, and we'll get into what we're seeing in terms of the statement coming through on that front. See if I can just get that to load up, and then we can bring you, let me make it a bit bigger so I can actually read it, and then we can figure out what is happening here. In terms of the statements, the composite output index was the highest since April, signaled a solid increase in private sector business activity. The headline index is now posted above 50, the no change threshold for 10 consecutive months. This is good numbers. Basically, that is what seems to be the signal coming through from the PMI data. August PMI signaled another solid expansion of the UK private sector output, supported by a robust upturn in new order intake. Sounds good. Certainly sounds a lot more positive than the data we've seen coming out of Germany this morning. John Stepek, who is the author of Bloomberg's newsletter, Money Distilled, sitting next to me. The UK appears to be kind of confounding expectations right now. This is not great data, but it's not bad data.
Yeah, and I mean, this has been the pattern for the UK for the best part of 2 years now. You know, back in 2022, we were facing what was expected to be the longest recession in living memory. At one point, that was the Bank of England's forecast. Instead, we got a kind of minuscule technical recession that may even be eliminated from the record when they revise it. And certainly for most of this year, it's been very clear that the numbers have been getting better, been surprising to the upside consistently. Most of the GDP forecasts for the year ahead are probably still wrong, probably still weighted to the downside. So I think there's actually probably plenty of room for further surprises. And this latest PMI data, again, the PMI data keeps surprising on the upside as well. So, and it does look very different to certainly the Eurozone, but also the tone in the US, where now everyone's panicking and saying, oh, the Fed needs to cut, you know, for the next 4 months in a row.
Chris Williamson down next to the chief business economist down there. Although GDP looks set to weaken in the third quarter compared with the impressive gains seen in the first half of the year, the PMI is indicative of an economy expanding at a reasonably solid quarterly rate of around 0.3. Does the Bank of England need to cut rates right now?
I mean, it doesn't need to. I think it was sensible to cut in August because the other issue we've got is inflation is going to now tick up towards the end of the year. And okay, maybe you can look through that. You can make an argument for looking through it. But given that in December there's a good chance inflation will be closer to 2.8% on the CPI, nudging the 3% mark, it's going to be difficult, I think, for the Bank of England to justify cutting rates drastically. And the interesting thing about that, I guess, is, well, what's that mean for sterling? If you get Germany in despond because basically it's a leverage play on China, and if you've got the US kind of worrying that suddenly, the soft landing is off the table, then maybe sterling is an outside bet for one of the stronger currencies going into the end of the year.
In terms of what is happening in the UK, the inflation story is going to tick higher. But could it tick significantly higher? I keep watching this conversation that seems to be happening between the Labour Party and the unions right now. And the unions are asking for some big numbers, and I'm just wondering whether the Bank of England is going to be watching that quite carefully.
I mean, I'll be very interested to see what Andrew Bailey says whenever he's over at Jackson Hole. I'm sure he'll be on the negative-ish side because he'll want to fit in with the other sort of central bank tone there. I mean, obviously, he doesn't want to be political either. But I would be concerned because, you know, the new government has got a certain amount of time to put a line in the sand and say, OK, guys, we've given you what you wanted on this. We wanted to clear the decks, but now it's hardball. You know, there is quid for the quo. And the risk is that doesn't happen because maybe the unions see or think that they're pushing on an open door. So it's kind of up to the new government to make sure that the unions know, actually, that's not an open door. You know, we made a...
you think that's what they think, though?
Oh, I think it's pretty clear that that's what they think. I mean, some of them are talking about going back to...
No, I'm not about the unions, I'm talking about the Labour Party.
Oh, no, well, that's a good point. Yeah, we don't know. I mean, the problem with the current government is that you don't know if it was just putting on, I feel like, a Tony Blair-style mask so to get into power. Yeah. And actually, you know, they're kind of more like a kind of Jeremy Corbyn-light kind of government. But I don't think we'll know that for sure until October the 30th, which is when Rachel Reeves delivers the budget. Because at that point, we'll see, obviously there have been many policies pushed through already that I think it's fair to say have an ideological tinge. The VAT on private school fees is a good example. Doesn't raise a lot of money, punishes a certain section of society that is, you know, unpopular with Labour's core vote. If that's just red meat for their base, and we can see a more sort of a pragmatic set of policies at the end of October, then perhaps, you know, things will go the way we want them to. Yeah. But if it turns out that they're actually more left-wing than perhaps people had expected, and they are more interested in, you know, redistribution and kind of perhaps penalising certain groups in favour of their favoured base, then yeah, we could be in for a rough ride. And I do think inflation's something we need to watch anyway. Yeah. You know, because it's even, you know, it's been ticking up in the Eurozone as well. It's not, that inflation isn't going away, and history does suggest that after the kinds of inflationary shocks that we've seen, you can get second waves. It doesn't mean we definitely will, but actually, you know, in reality, the probabilities are quite high that we could get something much higher. So, no, inflation is something we need to watch.
John, always a pleasure. Thank you very much indeed. John Stepek, breaking down the numbers and the analysis of what is happening around the economy right now here in the UK. What are we going to talk about next? We're going to return to the political story. Tim Walz taking centre stage last night at the DNC, the Democratic National Convention taking place in Chicago, rousing the crowd by telling them to turn the page on Donald Trump. We'll talk more about this next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Thursday the 22nd, welcome back. This is The Pulse. I'm Guy Johnson in for Francine Lacqua. Let's talk politics now. Day 3 of the DNC, the Democratic National Convention in Chicago. Well, that was yesterday. That was last night. The Democrat vice presidential nominee, Tim Walz, officially accepting that nomination. Taking the stage, it was an energetic speech. He said that Kamala Harris was the right choice to make middle-class Americans more wealthy.
If you're a middle-class family or a family trying to get into the middle class, Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma. If you're hoping to buy a home, Kamala Harris is going to help make it more affordable.
Down in North Carolina, Republican running mate of Donald Trump, J.D. Vance, telling a large audience that the U.S. needed a Donald Trump-led government to get the country back on track.
Now, Donald J. Trump represents something that so many in this country need right now, and I think it's important to recognize it. We need hope in the United States of America. Hope that we can reignite this economy and bring back prosperity to American citizens. Hope that we can raise our kids in secure neighborhoods and safe streets. Hope that we can renew the patriotism that binds us as a country together, one nation under God.
J.D. Vance there. Let's talk about the Walz speech, though, in a little bit more detail. Vonnie Quinn joins us now to give us an update. Vonnie, a lot of eyes on him last night. We're trying to figure out who this guy is. We're trying to understand what he brings to the ticket. What did we learn last night, and what did he tell us maybe about what we're going to hear from Harris as well tonight, or tomorrow, sorry?
Both. It's tonight for me and tomorrow for me, I guess, as well, little guy. Yeah. So basically, we got everything we were anticipating. The folksy, Midwestern, you know, middle-aged man, white man style of speech. We got it all in 15 minutes. He got down to brass tacks immediately. An attack on J.D. Vance. He said, you know, I had 24 kids in my high school class and none of them went to Yale. And that was a direct attack on J.D. Vance and his wife, both of whom went to Yale. And then he continued on. Several catchphrases like, we'll sleep when we're dead. And then he went into coach mode, right? He's called Coach Walz. He'll be called vice presidential nominee Walz soon, but for now he wants to be known as Coach Walz, and he said that he was best at pep talks. And so he said, you know, it's the fourth quarter, we're down a field goal, but we're on offense and we've got the ball. So very much a man who wanted to appeal to the working middle-class white rural voter across the Rust Belt and even the Sun Belt, because those are states that this ticket needs to win, and somebody who also wants to engage this crowd. It's down to brass tacks now. There's 75 days left, and there was a lot of excitement and a lot of celebration and a lot of celebrities at this DNC. But once tomorrow night is over and Kamala Harris is accepted, then it's down to business.
As you say, a star-studded affair thus far, this DNC, and it looks pretty slick. So what were the other sort of big key speakers delivering on day 3?
Well, when you start your day with Stevie Wonder, Guy, it's very hard to know how to get better from there, but it actually did, and there was another surprise guest tonight, and that was Oprah. She's one of the people in the whole world who doesn't need a second name. We all know who Oprah is, right? She's also an independent voter. She's registered independent, so it was very interesting that she came out to speak to independent voters, and that was something that we hadn't seen at the DNC before. She said that she had been an independent her entire life and had voted her values, and that the crowd needed to get out there and convince people to vote for the right part of the ticket. You obviously saw politicians as well. Bill Clinton with some funny lines during the night. He said that even, you know, 25 years on from the White House, he's still younger than Donald Trump. And obviously Amanda Gordon, as you're seeing there, and it'd be fascinating to see who introduces Kamala tomorrow. The New York Post is saying it might actually be pink.
Wow. Okay. So the star-studded affair will likely continue. Vonnie, thank you very much indeed for updating us and continue to keep us updated on what is happening here. Let's get some analysis of the situation. For more on the DNC and the US election, we're joined by Natasha Lindstedt, who is a professor in the Department of Government at the University of Essex. We thought we had her. A moment ago, she was there.
Thanks for having me.
And now she's not. Oh, I can hear her, but I'm told that she is not good. Natasha, bear with us. We're going to sort out some technical issues, and we'll come right back to you in just a moment once we have cleared those through. But basically, we are waiting now to figure out exactly what we are going to hear from Harris. We'll bring you that speech, obviously. We've got some extended coverage coming up right here on Bloomberg, and we're going to have some fantastic analysis for you tomorrow morning. We're also going to have some fantastic analysis after this break. We're back in a moment. We'll fix our technical gremlins, and we'll be back with Natasha in just a moment. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Real World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Today, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in today on Bloomberg Television. Today, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
Welcome back. You're watching The Pulse, 48 minutes past the hour, nearly 49 minutes past the hour. So before we don our cowboy hats and head to Wyoming for Jackson Hole, probably worth just spending a few minutes' time talking about what has been happening in the euro area this morning, plus also the UK data that we've seen, because we're going to get more of it a little bit later on. We need to kind of get a handle on what is happening here. The big picture story out of the euro area in aggregate is basically that the composite PMI came through a little bit better than anticipated, 51.2. The forecast there was 50.1, i.e. we have stayed out of contraction territory. Now, the reason for that is that we saw a very strong print on French services. The bulk of the French economy is services, and the Olympics has had a very big and disproportionate effect. So you had a 55 print there. It was much better than anticipated. The expectation is that that's going to roll over next month, and this is something of an anomaly and a one-off. The German data was pretty shocking, particularly on the manufacturing front, and also on the fact that we've seen a pickup in the inflation story, and that was very much highlighted as part of the commentary that went with the German PMI data this morning. The UK data looks a little divorced from all of that. It actually looks fairly solid. It continues to deliver expansion, and we've seen multiple months of this coming through. So the composite number rising to 53.4, the forecast there 53. Now, later on, we're going to get data out of the Eurozone on the wage front. Pay attention to that. We've obviously got claims data coming up out of the United States as well. So that's kind of the picture as we head into day one of Jackson Hole. Now, we're heading into the last day of the DNC, so let's return to that topic as well. We saw the vice presidential nominee, Tim Walz, delivering his speech last night. We're going to be hearing from Harris a little bit later on, and it'll be interesting to see ultimately what she has to say. Natasha Lindstadt, we fixed the technical problems. We're back with the professor from the Department of Government at the University of Essex. Thank you for your patience. We greatly appreciate it. So what do we make of Tim Walz last night? What did he deliver? What does it tell us about what we're going to be hearing from Harris this evening?
I think Tim Walz delivered what Democrats wanted him to deliver, which was this sort of joyful, fun speech. It didn't go on too long. It was, as he mentioned, more like a pep talk. And he talked a lot about his background, his upbringing, his family, how much he loved his family, and what his values are, and what Kamala Harris's policies are going to be, as has already been outlined, that she cares about the average American, that she cares about lowering the cost of prescription drugs, making housing more affordable, things like lowering taxes for the middle class, where he's contrasting that with Trump, who is going to be lowering taxes for the rich. So he was really trying to appeal to a certain demographic, particularly in the Midwest, maybe rural voters as well. But he's also going to appeal to male voters. And that is one group that Kamala Harris is behind on compared to Trump. So the hope with a Walz on the ticket is that this is going to expand Kamala Harris's appeal.
Okay. How far did he reach to the right? It was really interesting hearing him talk about the Second Amendment, gun rights, etc. How different a candidate is he, and how great an ability does he have to reach into the middle and further right than maybe other Democrats have right now?
I mean, I think that's a big part of why she chose him, because Trump's attacks on Harris have been that she's this left-wing liberal from California, and so she wanted to balance that with someone who appeared to be more moderate, and he was moderate as a congressman. But then once he became the governor of Minnesota, he embraced more progressive ideals. You're right, he mentioned the fact that he is a gun owner, that he is a hunter, but that he also believes in gun control while not trying to get rid of the Second Amendment. So I think that was one of the ways that he was trying to appeal to those that are criticizing Harris, that she's going to overturn this or that, or that she's some sort of communist, and he's trying to make it clear that he's really more of a moderate, but also embraces some of these progressive values so that he can appeal to a wide range of voters.
This is a really slick DNC, and much slicker than I think we would have anticipated only a few weeks ago. How high are expectations for what Kamala Harris can deliver tonight?
The expectations are really high, and you're right. There's been all kinds of momentum, all kinds of positive energy. I mean, the way that the Democrats have turned this campaign around in the last 4 weeks, I mean, you would not have predicted this. The Republicans had a pretty good convention. They looked like they were on the poised to win, and the Democrats were in disarray. And then meanwhile, once Harris took the lead, she's been able to attract huge crowds, and both she and Waltz have been this really dynamic duo. So there's going to be a lot of attention on her. Can she bring the type of energy that, let's say, Michelle Obama, Barack Obama brought on night 2? Is it that type of movement? And thus far, it seems to be the case. You know, she's coming out to music by Beyonce often, and she made a surprise appearance on night 1. There was a lot of excitement about that. So she's going to have to keep building on that momentum, and then, of course, be able to articulate the types of policies that resonate most with voters.
How do the Republicans respond?
So the Republicans should respond by focusing on policy. I mean, that's what many experts have said. They just need to focus on the idea of, there's inflation, that inflation is worse than it was 4 years ago, which is true, and focus on the issue of immigration. That's another issue that Republicans connect with. Instead, you see Trump ignoring advice. He just is focusing on personal attacks. I mean, one of the most recent ones was saying that he's better looking than Kamala Harris is. He seems bewildered when he's trying to explain what's going on with inflation by showing 2 Tic Tacs and one really small, or sort of breath mints. He can't stay on message. He's in a corner at the moment. And when he gets in a corner, when he feels like he's losing, he becomes unhinged. And if he doesn't get more disciplined, he's going to keep seeing his poll numbers dropping.
Be interesting, yeah. He's got a much more sort of professional crew around him this time around. Can they get him back on track? I think is a key question. Natasha, thank you very much indeed. And Natasha Lindstadt from the University of Essex, thank you very much indeed for the analysis and the patience. Let's talk about the rest of the day. What else we got coming up? So 10 a.m., you really want to pay attention to this. It's coming up very shortly. Euro area negotiated wage indications coming out of the ECB. That's a key piece of data. Peloton earnings out a little bit later on. We've got claims data out of the United States. US PMIs are coming up. It is day 1 of Jackson Hole, and it is the final day of the DNC. We are going to have the Kamala Harris speech a little bit later on. Pay attention to that one. The world certainly will be. Anyway, that data is about to drop. Up next, The Brief. Manus Cranny in New York. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning from our global headquarters in New York. I'm Manus Cranny. Welcome to Bloomberg Brief. Let's set your agenda. Policy watch. Markets steady ahead of the remarks from Fed Chair Jerome Powell and the BOJ Governor Ueda at the end of the week. Plus, the latest read on the U.S. labor market and PMI on deck after dovish signals from the payrolls revisions. And VP Harris gears up for her acceptance speech as the presidential nominee at the DNC. A very good morning. We have a heady cocktail of bullishness going into this Jackson Hole. The BLS revisions, more than 800,000 jobs 24 hours ago. That's what you were told, less than the market had anticipated. So what you have here is revisions. You have the ammunition in the form of the Fed minutes. You have the ammunition for a dovish Jay Powell at Jackson Hole. Will he pull the trigger in terms of shifting the narrative of perhaps 25 basis points? What kind of tone will we get? Anyway, we're at a 5-week high. UBS are still sticking to their guns. 5,900 in the near term by December on the S&P 500. 6,200 by June of next year. The bond market saw short end of the curve drop by 10 basis points on the back of the Fed minutes. Obviously, you've got the vast majority looking for a September lock. We're just steadying our nerves this morning, giving a couple of basis points back this morning. Crude steadies having lost 5% in the past 3 sessions. You've had Olympic-style volatility in the oil market. Any dip is a buying opportunity, according to Citi. And, of course, we've got these port disruptions in Canada. We'll talk to you more about that in a moment. Charles Schwab this morning, a little bit lighter, down by 4%. They are setting aside nearly $3 billion in total. Now, TD are setting aside $3 billion for money laundering and lightening their shareholding there. So keep an eye on Charles Schwab as we go through the day. It is all about central banking, the rhetoric, the narrative, etc. With a gathering in Jackson Hole for the annual economic symposium. Let's bring in Bloomberg's Jill DeCease. She is tracking all the narrative ahead of that. Jill, good to see you this morning. The clues, I mean, they have a framework. They've got everything that they need. I think Standard Chartered, Stephen Englander put out a lovely line, said he's never seen such a dovish set of minutes. And then, well, why would Powell go out of his way to wrong foot us today? But, you know, everything's in play.
Yeah, Manus, I think that at this point with Jay Powell, it's really just about setting the stage for whatever happens in September. Obviously, all signs pointing to a rate cut. The question is how large that cut will ultimately be. You know, because, I mean, you look at, you know, markets right now are pricing in, you know, enough cuts by the end of the year where at least one of these upcoming 3 meetings you'd think would have to be a 50 basis point cut. Is it going to be September? Not really sure that we're there yet. But yes, I mean, certainly the stage, as you've been set, as you said, has been set for, you know, a dovish speech from Powell here, trying to reassure markets that, you know, look, you know, we kind of know what we're doing. You know, we're kind of getting on here. We'll have to see how much detail we actually get out of him at Jackson Hole, though.
Channeling his inner Greenspan, can he deliver the 1995 soft landing as is fabled by Greenspan? And I suppose the debate is whether they front load. You know, the vast majority seeing September as live. Look, I think the other side of this coin, whether it's dollar yen or whether it's the rate floor or the repatriation, it's going to be whether the Bank of Japan governor really sticks to his guns tomorrow in front of Parliament with his very hawkish pivot. This is about credibility and monetary policy credibility for Japan, isn't it?
Yeah, Manus, I mean, if you're Bank of Japan Governor Ueda, at this point, a lot of BOJ watchers are just saying, please don't make any news, don't shock markets. I mean, you know, as we all saw after that July 31st meeting where they did raise interest rates, and then you had those particularly hawkish comments from Ueda, we then, you know, had a $6.4 trillion stock market rout. We obviously saw what was happening with the unwinding of those carry trades. I think at this point, you know, we've got this really unusual meeting before lawmakers. I think he's going to be speaking to lawmakers for a total of like 5 hours or so. So I mean, lots of room to, you know, really hear from Ueda. But really, at this point, as I said, a lot of BOJ watchers are looking at this and saying, we don't really want any more market shocks. We really just want to see, you know, what he's going to say. But ultimately, he's got to walk a fine line there ahead of the next meeting. I'll also point out, you know, Manus, that the next time that the BOJ has another meeting, that's going to be coming right after that Fed meeting in September. So we'll have to see how the BOJ responds there, especially when we're gearing up for this widely anticipated interest rate cut from the Fed.
Okay, Jill, let's see what the next couple of days bring to us. It can shift the dynamic of these markets. Jill DeCeasler tracking ahead of Jackson Hole. We had a little bit of breaking news in Europe, 3.6% for the second quarter. What is that number? It is the negotiated wages, according to the ECB. Now, the decline in the headline negotiated wages will be pretty much welcomed by the ECB ahead of the September meeting, where it's expected to cut by 25 basis points. And of course, you've had the PMIs in Europe getting a little bit of a kicker from the Olympics as well. So not all bad news on the economic front for the Eurozone either in terms of the narrative for them. Let's get to my guest. It is Simon Dango. He's weighing in on the Fed's rate path with this. We think the first rate cut will be a close call between 50 and 25 basis points, while the downside risks to the economy point to 50 basis points. We recognize the recent data, including strong July retail sales. Another fall in the jobless claims are more supportive of a 25 basis point move. Measured as they go. Simon, good morning. Good to see you. Good to see you. Look, we have this narrative now. We have the Fed minutes, where the vast majority are talking about September. We have the BLS revisions. It's a very, very dovish cocktail that we've got going into this. I was going to say Greenspan, why would Powell wrong foot the market over the next couple of days?
Well, I think that what we're going to hear from the Fed is the term well-positioned, which is, I think, something which they've used in a couple of the press conferences before, and I think that Powell's going to lean on that when he sort of communicates to us at the end of the week. And I don't think we're going to get a lot in terms of really whether they're thinking about 50 or 25. That's ultimately going to be settled by the labour market data that we get on September the 6th. Now, I think the important thing to remember when we think about the policymaking cycle for the Fed here is what the starting point of rates is at. And that the first 200 basis points of the rate cutting cycle is really about taking conditions from tight to something which is more neutral. And that can, in fact, play out quite fast. Now, whilst the data case may not be there for them to go 50 at the September meeting, and certainly our broad read of the labour market data is that it's softening, but it's certainly not falling off a cliff. You're not seeing the breadth of indicators that you might see if it was falling off a cliff. Jobless claims are reasonably well behaved. We'll get another update on that. Today, companies are not really talking about layoffs in any major way compared to what we've seen in recent quarters, but we are seeing this softening, and given that high starting point of rates, it makes sense to have that early part of the rate cycle play out reasonably quickly. So we certainly wouldn't be surprised in the context of the next several meetings if a 50 basis point or a couple of 50 basis points goes up, and we think that that's a backdrop where the curve can continue to be under steepening pressure.
So you, in this cycle, you are penciling in, what, a couple of 100 basis points cut? Pretty much a normal cycle of cuts then?
Well, I think that the question is, the 200 basis points of the cuts really speaks to just taking away these tight level of rates. Yeah. I think that's what sets up a much more interesting setup for the bond market than we've been in for some period of time, because I think we are moving to this phase where growth dynamics, rather than inflation dynamics, are going to set things up. The central banks will no longer need to be as tight. Of course, the Fed is only embarking on this process of reducing rates most likely in the coming month. 6 other central banks and DM have already begun this process. We've clearly moved central banking into a different phase. That's a phase where bonds have different portfolio roles versus the phase where central banks are trying to fight inflation. And I think that, again, opens up scenarios where there's a lot that's uncertain about 2025. The global growth picture is quite uncertain. There's certainly continued weakness coming out of China. There's lots of geopolitical uncertainty around. And I think there's in a scenario where you were to see more weakness than we would expect, you could see quite a drop in terms of front-end rates. So yes, our base case on a resilient scenario is something in the region of 200 basis points of cuts. But the skew is something which is more to the downside of that. And of course, the bond market, I think, allows you to get some protection to that in your portfolios now.
And I think this is the narrative that we've seen in this recent hubris, if I can call it that, or disruption at the beginning of August with the carry trade unwinding, is that bonds did perform very much as a hedge, or they have done in recent volatile periods, which then brings us to the shape of the curve. If we go with the thesis, as you say, look, man, it's probably 25, maybe some shotguns of 50-50, but overall 200, what do you see then the curve disinverting? Do you see a momentum? We saw a moment of disinversion, Simon, just a few weeks ago. Do we retest that, or how do I play the curve?
Yeah, I think we do see it go down the path of disinversion, and in a way which doesn't necessarily signal that we're going to go all the way to a very steep curve. But I think it's important to recognize that the policy cycle is likely to play out quite differently from the last couple of cycles. That with policy rates starting at this relatively elevated level, the Fed has a lot of policy space to adjust things with the short rate, and that particularly against the broader inflation environment that we find ourselves in today relative to where we were pre-COVID, it's not so obvious that the long end forwards in the curve needs to respond to any policy easing in the way that they would have done, let's say, for instance, in the mid-2010s, when we were operating against the effective lower bound. And then on top of that, you have this persistent high bond supply coming from all of governments really across the G10, which again is something which can keep the long end of the curve reasonably elevated. So it's our view that we are on the cusp of of at least an initial steepening, which will be larger if we do have weakness in activity, but that ultimately the next cycle will bring much steeper curves than we've seen in the last couple of cycles.
Okay, well, we all just got to dust off our 1994, 1995, 7 hikes, 3 cuts in 95, and the perfect soft landing. That's the words of Alan Blinder, not me. Simon, thank you very much. Simon Dangour there of Goldman Sachs, with your calls ahead of this Jackson Hole meeting. We are on tenterhooks for it. There are other stories trending on your Bloomberg terminal this Thursday morning. Let me take you through them. Deutsche Bank says it will review its shareholder payout plans as progress in one of its largest legal cases is expected to lift profit. The bank reached an agreement with over 80 plaintiffs in a long-running dispute over the acquisition of the retail lender Postbank. TD is setting aside $2.6 billion to cover fines it expects to pay for failures in money laundering controls. Canada's second-largest bank said the funding came from the sales of its stake in Charles Schwab. TD is under scrutiny for allegations that the bank employees took bribes to help move money at branches in New York, New Jersey, and Florida. Canada's 2 largest railways have shut down after failed union talks, putting a major strain on North American supply chains. Over 9,000 employees at Canadian National Railway and Canadian Pacific Kansas City were locked out after a deadline elapsed earlier this morning. Coming up, Vice Presidential nominee Tim Walz introduces himself to the nation. We recap day 3 of the Democratic National Convention, and we look at the issues in the White House race with Thomas Gift, Director of the Centre on U.S. Politics at the University College of London. Context matters on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Today, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in today on Bloomberg Television.
It's the honor of my life to accept your nomination for Vice President of the United States.
When Kamala Harris is president, every day will begin with you.
Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma.
Kamala Harris will work to solve our problems, seize our opportunities, ease our fears.
If you're hoping to buy a home, Kamala Harris is going to help make it more affordable.
We're going to be teaching our daughters and sons about how this child of an Indian mother and a Jamaican father grew up to become the 47th president of the United States.
It was a roll call of political royalty there, the scene in Chicago last night for day 3 of the Democratic National Convention. Tim Walz took center stage as he officially accepted the nomination for Vice President. Vonnie Quinn has been tracking the agenda from Washington. Vonnie, good to see you. I suppose it comes down to, I mean, we had a lot of pomp. Oprah there, obviously declaring she was an independent. She's happy to be back in the voting booth again. How did Tim Walz actually perform? Who did he lean into? Who did he appeal to on this national appearance?
He leaned into exactly who we expected him to lean into, Manus, and that was the rural, white, working-class voter. So his high school football team, the one that he coached, this Coach Walz that we keep hearing about, they appeared on stage before he took the stage. So it was a really concerted effort to try and make this guy very familiar, very easy to understand, and very remarkably different from someone like a J.D. Vance. He even said, I had 24 kids in my high school class and none of them went to Yale. It was 15 minutes that he was on the stage. It was a tiny amount of time. He said things like, we'll sleep when we're dead. He said, look, I'm good at giving pep talks. I haven't done this kind of a style of talk before, but as for a pep talk, we're in the fourth quarter, we're down a field goal, but we're on offense and we've got the ball. So he really riled up the crowd. His message was, my policies don't matter so much as Kamala Harris's policies, and you heard him there talking about those policies. And basically, we've 75 days left was his message, and we need to get out there and hit the road running. Because yes, it was a star-studded event, as you say, Manus, and it really was a very entertaining several hours. But once tomorrow night is over, once Thursday night is over, then it's campaigning.
Yeah, I mean, he talked about reproduction, within his own family, reproduction rights, leaning into some of those issues, also touting responsible gun control. So I think it's that balance on the ticket that they had been hoping for in terms of who can he appeal to. And then we pivot to Kamala Harris tonight, and this is her moment. She accepts that nomination. I mean, she's rolling in the dollars. She's switching on a volume of contribution, the likes of which we haven't seen even under Biden. We're 75 days out until the election. Where does she lean to tonight?
Well, I think we won't hear too much about new policies until after the DNC, right? The mood is too exhilarated and energized, and what she'll want to do is basically give a call to arms to all of the people in the room and those beyond and say, go out there and work for me. This is your official ask. But she'll also want to introduce herself to the nation. She will very likely talk about her biography, as Tim Walz did for a few minutes at the beginning, about her past as AG, about how she has prosecuted bad guys and bad people everywhere, about her role in the Biden administration and how much she believed in the causes that they fought for, and the future. There'll be a lot of talk about looking towards the future as opposed to the past. It'll be interesting to see if she digs Donald Trump at all. We did obviously have several speakers do that tonight. We had even Tim Walz mentioning the weird comment once again. He said Trump's agenda, is it weird? Absolutely. And that got a big laugh in the crowd, and obviously Bill Clinton as well threw some daggers towards Trump. Trump, for his part, is speaking on Fox in a couple of hours, so we should get, a fresher reaction from him to day 3 of the DNC. But we already know that he is needled. He was at his first outdoor rally since the assassination attempt, and he basically said, he wants to go personal again.
Yeah, well, I mean, he has been sort of chipping away at Barack Obama and Michelle Obama in terms of them getting personal, and then his aides telling him to stay on message. So it's a really fascinating piece of theater. He cannot stay on the message. Look, if I said to you, wrap up what kind of response he has had, he seems like somebody that's sort of on the metaphorical, personal attack ropes.
Yeah, I mean, he literally asked his crowd today. I mean, he's obviously been speaking to his aides. He's not maybe personally agreeing with them, but he asked his crowd 2 questions. Should I get personal? Should I not get personal? And the crowd erupted for the first option. So he actually said to them, my advisors are fired.
There you go. I tell you what, there's a bit of a distance. You know what? Stranger things have happened in this entire race. Bonnie, well done. You've only one more night to go. And then we can, I suppose, return to policy and the stumps. Bonnie, thank you very much, Bonnie Quinn in Washington. Coming up, I'll take you through the agenda and the headlines for the rest of the day. A little bit of data to come, jobless claims, etc., here in the United States of America as we count down to Jackson Hole. Good morning from a beautiful New York.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives of the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Great World Cup. This is a three
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Get you some front page news from around the world. This is what we've got for you. First up, the New York Times leads with a fairly tragic story. The divers have recovered a fifth body from the super yacht sank off Sicily. The bodies have not immediately been identified. The vessel had a crew of 10 and 12 passengers, including the British tech entrepreneur Mike Lynch. Next up, Washington Post independent candidate there, Robert F. Kennedy Jr. is closer to dropping out of the presidential race. He's expected to endorse Trump and announce his path forward on Friday. And Bloomberg leads with the media story. The investor Edgar Brofman raising his offer to take control of, you got it, Paramount. $6 billion on the table now. The move is potentially upsetting to the company's plan to merge with independent producer Skydance Media. All eyes down on the bond market. You had a drop of over 10 basis points at the very short end of the curve yesterday. That was on the back of the BLS revision of more than 800,000 jobs gone between 2023 and 2024. We just had a conversation with Goldman Sachs. The curve may potentially disinvert, a little bit of steepness, and they're going for 200 basis points of total cuts.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating And then you'd start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our global headquarters in New York, warm welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. We're on Policy Watch. Markets steady ahead of remarks from Fed Chair Powell and BOJ Governor Ueda at the end of the week. Plus, the latest read on the U.S. labor market and PMI on deck as we have more dovish signals from the payroll revisions. And the VP Harris gears up for her acceptance speech as the presidential nominee over at the DNC in Chicago. Good morning. They've everything that they need for a dovish narrative from Jackson Hole. Stocks are at a 5-year high. You've got a nice momentum trade carrying through there. There's a little bit of nervousness ahead of Jackson Hole, but the BLS revisions, 800,000 less jobs, more than 800,000 less jobs than we thought that there were, along with a fairly dovish set of minutes. Stephen Englander over at Standard Chartered says, I've not seen as dovish a set of minutes in many a year. Why would Powell wrong-foot the market now? So the S&P 500 up 0.1%. UBS are still going hard and heavy on the upside. 5,900 by December, 6,200 by June of next year. We just had a conversation with Goldman Sachs. They say, look, it's very finely balanced. This economy is not falling off a cliff. There's no real need to do 50 basis points in September, but the narrative should be maybe 25 basis points in September and a couple of blockbuster 50s. That will help you get a 200 basis point cut, get you back towards neutral, and maybe even deliver what Greenspan did in 1995, which was that soft landing. Right now, the twos are giving a little bit back this morning. We dropped by over 10 basis points at one juncture yesterday. The vast majority of the FOMC sees September as being a live event. It is now down to defining on that jobs report in September as to the scale of the cut. Crude is back in the red. We gave back over 5% on 3 sessions. We've got pretty Olympic-like volatility in there at the moment. It's not just the China slowdown, but it's also the risk of OPEC supply coming back. And cities say if OPEC Plus sticks to its terms, that could be more of a buying opportunity on any of these kind of dips. You're also just seeing Charles Schwab down nearly 4% at the moment. Of course, TD taking provisions yesterday for money laundering and at the same time cutting their stake in Schwab from 12.3% to 10.1%. That was a little bit unclear at the start of the show. Apologies for that. It is the final day of the Democratic National Convention in Chicago. Last night, we heard from the Minnesota governor, Tim Walz, the former president of the United States, Bill Clinton, and Oprah Winfrey.
It's the honor of my life to accept your nomination for Vice President of the United States.
When Kamala Harris is president, every day will begin with you.
Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma.
Kamala Harris will work to solve our problems, seize our opportunities, ease our fears.
If you're hoping to buy a home, Kamala Harris is going to help make it more affordable.
We're going to be teaching our daughters and sons about how this child of an Indian mother and a Jamaican father grew up to become the 47th president of the United States.
Bonnie Quinn is with me from Washington. It's wonderful, isn't it? You end with Oprah. Everyone gets a prize at the end. I mean, it was a pretty euphoric evening. It was political royalty. It was a real sense of backing of this ticket and the momentum carrying through from Hillary Clinton just the evening before. Let's define the waltz performance. On point, on message for middle America, middle white male America, which balances the ticket. Is that the thinking?
Basically, yes, Coach Waltz, as he's been known, right? He was a high school football coach as well as a teacher. He laid into his teaching credentials. He said, never underestimate a public school teacher, which I think a lot of public school teachers out there will absolutely relate to. And then, of course, 12 years as a congressman. This man has a lot of experience in politics. He didn't so much talk about his record and what he did in Minnesota as governor, which was quite progressive, at least for U.S. politics, but he moved the conversation to what Kamala's policies are, what Kamala will do for the American people. And that was an interesting thing to watch. The whole thing was done in 15 minutes. This is a man who is not going to beat around the bush. He's going to get to the point, and he's going to get out on the campaign trail and try and make this happen for the ticket.
He even took on a line or two on gun control as well.
He's a gun owner. He's always been a hunter, and he has never shied away from that. He's a very strong proponent of the Second Amendment. However, after Sandy Hook, and he makes a point to say this, he did fight for red flag laws and background checks, which is not something that other members of the NRA or other politicians backed by the NRA have done. The NRA downgraded him from an A+ politician after that.
I've been through a few downgrades in my lifetime as well, only to resurrect again. Now, Bonnie, let's talk about the response mechanism of the other side. Trump, he seems decidedly irked at the moment, and this is a question, of course, about one's personal vanity, one's personal message, because he wants to stay on the personal track as opposed to the low-hanging fruit, which is the economy and immigration. So it's not exactly going according to plan on the other side, is it?
Well, it's interesting, Manus, because Michelle Obama last night talked about how he whines a lot, right? Well, he was, you know, and this is not my word, whining a little bit today. It was his first outdoor rally since the assassination attempt. He should have been in very joyful, I guess, humor, but he said that the Obamas were getting personal all night long. He had a problem with that. He actually called Barack Obama the word nasty. And then he asked the crowd 2 questions. Do you want me to get personal, or do you want me not to? We know he's been complaining that his aides have told him not to. The crowd erupted after he said, do you want me to? And so we'll have to see. He appears on Fox in 2 hours.
He loves talking about crowds, doesn't he, Vonnie? Vonnie, thank you very much. Vonnie Quinn there in Washington. One more day to go. My guest this morning is Thomas Gift, Director of the Centre of US Politics at the University of College London. Thomas, good to have you with us. Is Trump whining? Let's just start there. We'll get to the DNC in a moment. We've got another whole day to go. Let's flip the script. Is he whining? Is he losing votes? Is he right to go on the personal poor me, poor me?
Well, I think he's whining. Trump is dejected. I mean, the race has been totally pushed around. I mean, a couple of weeks ago, it looked like he was going to just cruise to victory, and now the script has totally been flipped. So he's really struggling right now, I think, to figure out what line of attack works on Kamala Harris. You know, he said that she didn't identify as black. He said that she's a diversity, equity, and inclusion candidate. None of that's resonating with voters, and we can see that in the polls. So he's still trying to figure this out. He hasn't gotten there yet. I think ultimately he'll just settle on this line that she is, Harris, a San Francisco liberal. But for now, he's whining. I think that that's the best way to describe it.
And let's just round that off. You would say that Trump has squandered the black vote in that a month ago he was on pace to collect more black votes than any Republican presidential candidate. How injurious was that performance at the journalists? Was that the pivotal moment perhaps in this election at the Black Journalists Convention?
Well, I think that combined with the fact that Kamala Harris is now the Democratic nominee, and she would be the first female individual of color to hold that position. So it's a combination of factors, but certainly he hasn't done himself, Trump, any favors with the black vote. You're right, he was on pace for this record-setting pace among Republican presidential candidates. He's really squandered that. He's really squandered that among black males. If you look at the data, that's where most of his decline has been.
We caught up with the Agricultural Secretary, Vilsack, and he talked about Waltz. Obviously, he had a 15-minute performance to the nation last night. I just want to get your sense. Vilsack said this guy is one who can talk rural. He can win. He can convince people in Wisconsin, Michigan, Pennsylvania. There you go. There's no one's going to win, I don't think, without Pennsylvania, Nevada, and Arizona. He really has the ability, or do you believe he has the ability, to talk rural, cut through, and convert the undecided vote in those swing states?
Well, if you just look at Tim Walz, I think he's the idea of a candidate who can talk to these rural voters, can talk to these blue-collar voters. I mean, he wears camouflage. He's often pictured with a gun. He's a hunter. And so everything about him says, I can speak to these voters that maybe Kamala Harris was having a tough time resonating with. At the same time, I do think that he has some political liabilities insofar as many of the policies that he pushed while governor are far to the left of where kind of mainstream America is, centrist American. So that's a difficult needle for him to thread. But I think just the optics of him are really good for Democrats.
Foreign policy, my understanding, in most countries rarely wins elections. Blinken returns without a deal from a whirlwind tour of the Middle East. A great deal has been written about protests, and there are some protests outside the DNC, but is it going to really swing anything in this election, do you think? I mean, these protests are not as bad, I think, as many people had presumed they would be. I think that's one assessment. But to the extent that they don't have a win for Biden at the moment in the Israel-Hamas no ceasefire yet, it doesn't seem to be bearing much either on the DNC or on the narrative of this election.
I think you're right, absolutely, that the protests have not been as much of a distraction as many Democrats feared. So that's certainly good news for Kamala Harris. I think she's still kind of struggling exactly how to frame this issue to voters. At the same time, I think you're absolutely correct that most Americans, at the end of the day, are not going to be voting on foreign policy. They're going to be voting on domestic policy. They're going to be voting on taxes, on education, on healthcare, and so on. But, you know, we still saw that protest vote in the primaries back when Joe Biden was the main candidate in Michigan. And so even if, 5,000 to 10,000 Democrats in any given state decide not to show up over this issue, that could, on the margins, make a difference.
Okay. Thomas, thank you very much. We're going into the final round of the DNC, and then we'll get into a little bit more policy that matters for America. Thomas Gift from the Center of U.S. Politics at University College London. Coming up, two of Canada's largest railways shuts down. We'll look at the impact across the U.S. economy and beyond. Context matters every day on Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It is Bloomberg Brief. I'm Menace Cranny in New York. Good morning to you. Wheat prices have been dropping. Take a look at this over the past couple of days. 2 days of a drop by more than 2%. Canada's two biggest railways shut down earlier this morning after the union talks failed. 9,000 employees of the Canadian National Railway and the Canadian Pacific Kansas City were locked out after failing to reach a deal with the Teamsters Canada Rail Conference. Over 90% of the grain that moves by rail in Canada, which is one of the world's top exporters. This is a ruckus the world does not need. We've got our Bloomberg trade czar on the case, Brendan Murray. Brendan, good morning to you. Just context the flow of grains out of Canada and what it means for the U.S. side.
Right. So as you said, Canada is a very export and trade-dependent economy, and it's estimated that about half of all the merchandise that Canada ships abroad and imports moves on a train at some point. So this is going to cause real problems if it lasts more than a couple days. I think all eyes right now are on the government to see if they'll step in and try to force some sort of resolution and get the workers back on the job. But at the moment, Moody's estimates that this is going to cost $250 million a day. So the costs are high, and the ripple effects could be wide.
Well, they certainly are. And then on top of that, you've got a whole host of things going on down here as well, in terms of other employees, dock workers down here, maybe looking at strike action in the United States of America later in the year. Brendan, good to get a short, sharp message out there on the context in Canada. Well, investors are laser focused on the Fed Chair Jerome Powell and his speech at Jackson Hole. The symposium, it's over the next couple of days. They'll be looking for further evidence that a September cut is on the way. Jill DeCease is with me. Well, look, Jill, we've had, I would say we've had everything to load up the gun to deliver a nice dovish message from Jerome Powell. I think what the market really wants to try and grapple with is the size. Is there any tone or intonation that they could go for more than 25 basis points?
Yeah, Manus, I think that's really what this is all about, right, is whether or not the Fed is going to front-load cuts in September, maybe go as high as 50 basis points. We do know that the markets are betting on quite a bit by the end of the year, implying that, there would be at one of these next three meetings, 50 basis points worth of cuts. Does that come in September? I think you're right that that's really what the market wants to get out of Powell. Not sure that he's going to go that far, but he certainly, has to talk a little bit about setting that tone for that September meeting. We've gotten some recent data, showing that labor market cooling, that downward revision in that annual data that just came out yesterday, showing that through March, the revisions downward to the tune of 800,000 or so. You're really kind of, bringing into pretty sharp relief here how important, the labor market has become as part of that Fed dual mandate, how much attention the Fed's been really putting on that. It'll kind of be up to Powell, though, to, kind of bring that into focus here, bring in all of that context and better set expectations for what's actually going to be happening at this September meeting.
Yeah, we just had a conversation with Goldman Sachs where they said he probably, this phraseology, well positioned, and they are of the view probably we're not falling off a cliff. The narrative is probably strong enough for 25 basis points, and then maybe look to load up the gun for 50s. The Bank of Japan governor has all to play for in front of the lawmakers. Jane Foley was with us earlier in the week, and she said he's going to be hauled in front of Parliament. So if you're hauled in front of Parliament, you've got to hold your nerve about not spooking the yen horses again and causing another unwind of the carry trade in the velocity that he managed to do after he hiked rates. What's in play?
Yeah, well, I mean, Manus, this is a big one. You talk about needing to hold your nerve in front of Parliament. Ueda is going to be sitting in front of lawmakers, answering questions for some 5 hours or so. I mean, that's quite a lot of time to sort of hold your nerve. But yes, you're right. I mean, look, after that July 31st BOJ meeting where you did see that interest rate increase, you also had some particularly hawkish comments from Ueda then that kind of sent markets into a bit of a tailspin there, right? I mean, you're talking about this massive unwinding of the global carry trade. Obviously, all of that's on the forefront here and is why, lawmakers caused this particularly unusual kind of out-of-session parliament meeting here for Ueda to talk. I think that what a lot of BOJ watchers are looking out for here, what markets are really looking out for here, is kind of a no sudden movements kind of a deal here, Manus. They just want to make sure that, whatever Ueda says, very much staying the course, not to make any kind of, major pronouncements on policy or anything like that. We'll see what happens, but, as I said, Manus, I mean, he's going to be talking for quite a bit of time, so there's going to be quite a bit of statements there from Ueda to parse through tomorrow.
There's plenty of room to make a small rhetoric error. Nobody needs another VAR shock like we had a couple of weeks ago. Jill, thank you very much setting the table for Jackson Hole and Ueda tomorrow. I want to show you the yield curve. We just had Goldman Sachs discussing the roadmap to Jackson Hole. They think 25 basis points in September and a couple of 50 basis point cuts. For them, it's probable the curve will disinvert, but not exceptionally steep. Let's see whether the language of Jay Powell is well positioned for the table setting of a rate cut in September. Coming up, we will set your trading day agenda for you. Context matters every day on Bloomberg. Good morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's Bloomberg Brief. I'm Manus Cranny in New York. Here's how your day ahead looks. Data, all important. 8:30 a.m., we're going to get the jobless claims, followed by the PMI. That's at 9:45. And existing home sales at 10 a.m. It is the last day of the Democratic National Convention, and the VP Harris formally accepts her nomination as the presidential candidate. A couple of stocks to note. We've been tracking Charles Schwab pretty much through the morning, down 4%. Now, TD Bank is selling a stake in their ownership, 12.3% to 10.1%. Part of that narrative for TD is they're trying to settle in full some of their litigation issues. Zoom Video extending a post-earnings gains after new products boost guidance. And Paramount, Brofman raises his offer for Paramount Global to $6 billion. Let's get a little bit more detail on that. Kimberly Adams is tracking the story for me. Kimberly, what have we got?
So this bid, Manus, it's going to top the $4.3 billion proposal that Edgar Brofman Jr. made back on August 19th. That was just a couple days ago. He really, really wants this company, it seems. So in addition to seeking National Amusements Incorporated, the Redstone family holding company for Paramount, for about $2.4 million, he would use the remaining funds to fund mostly to buy Paramount, that is, the shares. So the difference between this deal and the one with David Ellison is that Brofman is gauging this as something that really won't hurt investors. In fact, they're saying that it won't dilute investor shares, Manus.
Okay, Kimberly, let's see. That period of time that they've got to go find.
It's longer now. It's September.
There you go. You'll be back again.
Absolutely.
She'll be back. Don't worry. It's live succession in the making.
I love it.
She loves it. We love it. Let's see. $6 billion and counting. What will Sherry do with the next bid? Quick snapshot. We're currently down to Jackson Hole. The next 2 days are going to be unequivocal in terms of deciding global monetary policy and the trajectory from the Federal Reserve. What Jackson Hole says to not just about American monetary policy, but global monetary policy as well. 2-year yields over the past 4 days. Now, yesterday you had a little bit of a drop, down about 10 basis points, because what you saw was quite a significant revision from the BLS, which was in top of the number of jobs that were dropped from the U.S. economy between 2023 and 2024, down by 800,000. That's the most since 2009. That is not enough. What people are saying to me on the IB this morning is that is not enough in of itself to say that we're going towards a recession in the United States of America. The minutes were undecidedly dovish, according to Stephen Englander. He said, I haven't seen why would they issue minutes with this tone if Powell is going to wrong foot the market. And Englander goes on to say, the advantage of guiding dovish is that you can get easing through the long end of the curve and equities without a complete U-turn if the optimism is premature. And stocks are at a 5-week high. So you have this bullish tone going into the market. Yields were down by 10 basis points yesterday. Stocks flew to a 5-week high. As I say, if you get a dovish intonation, that can underlie the tone for the equity market. UBS are still there full and square, 5,900 by the end of the year on the S&P 500, 6,200 by next year. Priya Misra from JP Morgan Asset Management says, lock in a couple of 50s, get to neutral pretty darn quick. What would that do to the broadening of the equity market story? Would it mean a renewed interest in the Russell 2000? That is the debate. Surveillance is up next from the brief team. A very good morning. We'll take you through that speech from Kamala Harris tomorrow morning.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar, they're leaders in EVs, they're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries, and those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
This is a market where the growth data is now in the driver's seat.
This is an environment where the Fed can start removing policy restrictiveness.
It could take a long time to get to neutral.
If Godot didn't arrive here over the last really 18, 24 months, why should Godot arrive in August of 2024?
It's never about what the Fed should do, it's what the Fed is going to do.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading day started live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday with stocks within 1% of all-time highs on the S&P 500. Your scores look like this. Equity futures pushing higher by 0.05%, slightly in positive territory on the Nasdaq, slightly into negative territory on the Russell after some outperformance in yesterday's session. The small caps down by 0.2%. Your day ahead shaping up as follows. The annual Fed get-together kicking off in Jackson Hole, Wyoming. We'll catch up with the Kansas City Fed around about 7:30 Eastern time. We'll bring you some of that conversation. A sprinkle of politics, as always. The headline act a little bit later on this afternoon, this evening, will be the Vice President Kamala Harris. But the main event, I think, for financial markets, 8:30 Eastern time. Initial jobless claims. It is Jobless Claims Thursday. And Danny Berger, as you know, jobless claims has taken on a lot more importance over the last few weeks.
It certainly has, because jobless claims was the thing that essentially saved us. It was the thing that flipped us from saying we are heading off a cliff to everything is okay. The jobless claims numbers have come in remarkably resilient. Despite the fact we got that huge jobs revisions yesterday that essentially was used as a Rorschach test that everyone decided to read it how they want, jobless claims, because it has been trending in a very constructive way, if it breaks the trend today, that could be bad, or it could just reinforce that, hey, everything's okay, the rally can continue.
So last week's number was 227, just to give you an idea of the estimate today in our survey. The median estimate is 232. Danny also mentioned that massive revision we saw to a year's worth of payroll. So let's talk about some numbers. From April 23 to March 24, payrolls grew by about 170K a month. That was down from the previous estimate of about 240 a month. I'm hearing from the likes of Bank of America's Mike Gape and Danny that it's solid. It might not be strong, but it's still solid, and this is okay.
But again, everybody came into this with their own lens and took away from it what they wanted to. Bank of America might say it's solid, but someone like Neil Dutta looked at this and said it shows that the job market has been weaker for a while now, and the Fed and Powell is even more behind. And then you have someone like Goldman's that says it actually overstates the true number, that they think this will be revised again, and sure the downside was only 300,000. Or if you're a government conspiracy theorist, there was plenty for you in that report too.
Plenty, and plenty about the release as well that we'll talk a little bit about a little bit later in about 28 minutes time. We need to talk about the release, why it took so long and why some banks were just able to pick up the phone, dial a number and get the number themselves. We've got some questions about that. I've got some questions about whether we go 25 45 or 50 in September. Steve Englander of Standard Chartered had this to say about the minutes, which were incredibly dovish. And if you missed the minutes yesterday afternoon, essentially several officials were ready to go in July apparently, and the vast majority are ready to go in September if incoming data comes in line with their expectations. Steve Englander has this to say: it's hard for me to see why they would issue minutes with this tone if Powell is going to wrong foot the market in less than 2 days by being hawkish relative to market pricing. And he thinks the door is still open for this Fed, Danny, to go 50.
Well, I guess what does Powell gain by pushing back on this market? He essentially removes optionality, and we know that's something he wants, especially because they're looking at so many data points coming up, like the next labor report. The only thing I would say, John, is if you listen to Powell in the last presser, he was specifically asked by a journalist, how are you thinking about 50 basis points of cuts? His response, it's not something we're thinking about right now. And central banks tend to hate to admit errors, and essentially going by 50 after the last presser saying that they're not even thinking about it might in some ways be admitting an error.
Did you notice there was a bit of daylight between what Chairman Powell was saying in the news conference and what we actually saw in the minutes? Just a bit of daylight. And I have to say, I've wondered a few times, is Chairman Powell just doing a poor job of reflecting the consensus on the committee in the news conference, or are they just massaging the minutes? Are they shifting the emphasis of the minutes to catch up with recent information?
I was going to say, I've heard this argument before, and even as it relates to the jobs revision, like, hey, don't be distracted by jobs revision. That isn't the real revision going on. The revision is the Fed minutes, that they want to make it match more what the market is saying, or they just want to make it seem like they're not behind. I don't know. I'm not certain of that, but that argument certainly exists just because you do see the discrepancy of a Powell, again, who is talking about, we're not giving us a firm deadline if they are going to cut in September, yet the minute saying people are discussing July. That is a big difference.
There's another disconnect I think we need to sit on this morning too over the next 3 hours or so. BMO's Ian Lincoln picked up on this. The market expectations, soft landing hopes funded by hard landing rate cuts. How problematic is that? This is what Ian Lincoln had to say. It's striking that the outlook has quickly dimmed to the point of once again pricing in more than 100 basis points of cuts by year end in the absence of a tangible breakdown in the labour market. Do you think this market is set up dreaming about a soft landing but funded by the kind of rate cuts that would typically be associated with a hard landing?
Okay, so the argument you could make in the benefit of the market is that we've already had the soft landing, and now you just need to support it. And in order to support it, you need something that looks like neutral, which, again, none of us know what neutral is, but if it's something like 3.5%, and the Fed cuts 25 basis points in every single meeting, it won't be until June that they would get to 3.5%. That's nearly an entire year that it would take to get to neutral. So one of the arguments is that it's essentially just preserving the soft landing by doing recession-like cuts, because you need to get to neutral quickly before a soft landing turns into a hard landing.
Chairman Powell's address tomorrow morning will try and make sense of all of that. And then we've got a job print September 6th, a CPI print September 11th, and a week later you've got that Federal Reserve decision on September 18th. The scores going into all of that, if you're just joining us, welcome to the programme. Equity futures on the S&P 500 positive by about 0.1%. Yields a little bit higher by a single basis point, the 10-year 381.61. And the euro a little weaker. We'll talk about the Eurozone PMIs later in the hour. Better than expected, but France doing the heavy lifting with the Olympics going on, and a fear that maybe that's going to fade as we work our way out the other side of summer. Euro dollar 111.37. Coming up this hour, our lineup looks like this. Steve Chevron of Federated Hermes on the warning signs he sees for the US economy. Anne-Marie with the latest from the DNC ahead of Harris's keynote address later this evening. And Tom McLaughlin of UBS assessing the impact of the US election on financial markets. We begin with our top story. Stocks heading steady with the focus squarely on Jackson Hole as the Fed's annual get-together kicks off. Steve Chevron of Federated Hermes writing the following. While we remain overweight stocks and expect only a modest slowing of the economy and measured Fed rate cuts starting in September, we do note some warning signs. Steve joins us now for more. Steve, good to see you. Last time we spoke, you used this word fine. You said growth was fine, inflation was fine, earnings were fine. That was the start of summer. Where are we now? Is everything still just fine?
Well, I think it is still fine. And again, we expect growth to slow a bit, not a ton, and we expect the Fed to start rate cuts, but in a measured pace. So, when we think about rate cuts, we're thinking one a quarter for 8 quarters, not one a meeting. And I think that's quite different than what the market's pricing in. But the warning signs, John, are, forget about the labor revisions yesterday. The unemployment rate's up 0.9% from its cycle low. Now, historically, whenever that's happened, you were already in a recession. Now, we don't think we are today. Look, a lot of that has to do with this big surge in the labor force. A lot of that has to do with really southern border crossings and the number of non-U.S. foreign participants in the labor force. But that has to warrant your attention. You've got a yield curve that's uninverting. That historically is a big warning sign as well. And then, finally, the political uncertainty is much greater now than it was just a couple of months ago when you had two essentially incumbents in office. Whereas now you've got one candidate with a set of policies that's, less certain. And so you look at those three things together, and I think they all warrant attention, especially with the market trading at an all-time high here.
Well, let's pick out those three things again, Steve. So a relatively sharp increase in unemployment, the disinversion of the yield curve, which we typically associate with the onset, the beginning of a recession. And the third point, just the policy, political uncertainty on the horizon. When you put all that together, Steve, is that reason to pull back, to de-risk just a moment, for a number of months? Is that what you're doing?
Well, it certainly was on the growth side. Growth stocks are trading, still are trading above 30 times. They really only did that during the pandemic and the great financial crisis. And we thought a lot of good news was priced in. If you look at that disinversion of the yield curve, what's happening is the short rates we expect to come down. Let's call it a couple hundred basis points over the next couple of years. But we think that the long bond is about fairly valued, maybe even a little expensive here. We think about a 2.5% long-term inflation rate, 50 basis point real rate, 100 basis point term premium. That's about a 4% treasury. So we think companies that are funding short, we think companies that require a steeper yield curve are the ones that are going to do best. And those are things like small caps. Those are things like financials. Those are things like value names. And there we still feel very good because they're trading at reasonable valuations and they're starting to assume the leadership in earnings growth. But for big tech and growth, we think things have been as good as they can be and they're getting less good.
Steve, though there are warning signs, as you point out, so how do you basically get your head around this idea that a steepening yield curve would be better for small caps, cyclicals, value stocks, but a weakening economy wouldn't necessarily be good for them?
No, it's a great question. It's why the mosaic has to come together, and it's important. If we thought that there was a recession on the horizon, you would not like those parts of the market. But if you're just seeing a modest slowing, then that's okay, particularly if it's a modest slowing in the context of rate cuts, right? Whether or not the Fed goes 50 or 25 or does, 50 basis points of cuts this year or 100, you pick the number. We think what's more important is that there's a couple hundred basis points of cuts coming over the next 12 to 24 months. We think it's more like 24, but whatever. It's still 200 basis points coming. And that absolutely helps small caps that have a lot more variable rate debt. And it absolutely helps companies that are shorter duration, like value names, as opposed to the longer duration growth names. And so I think when you look at an economy that's slowing but staying okay, fine, if you will, John, rate cuts that are coming, you put all that together, that's pretty good for those parts of the market.
One thing I didn't hear you say, Steve, is momentum, and that had been the trade before the August 5th turmoil. Is it fair to say that these momentum, growthy, type frothy names, that's not the trade anymore? Are you basically saying not only are those small caps and value stocks going to do well, but they're going to take over the leadership of this market?
Yes, that's exactly what we're saying. And we put our money where our mouth was. We added 3 to 4 points to large cap growth last October on the lows, or near the lows, maybe not quite on the lows, but near the lows. And those names were up 50% from when we bought them, back in last October, trading over 30 times. Again, against the backdrop of rate cuts that should benefit different parts of the market. When you look at relative earnings growth, Mag 7 was growing 50% year over year at the beginning of this year. By the end of this year, we think that's going to be something closer to 15%. While, let's call it the forgotten 493, their earnings were declining 5% at the beginning of the year, and we think they're going to be up 20 by the end of the year. So with that kind of handoff, with the rate cut regime changing, with the nature of the way that the yield curve is uninverting, we think all of that creates new leadership.
Steve, that's where the market's going. We've seen that recently. Equal weight S&P 500, again, all-time highs at a close yesterday. Small cap with clear leadership and outperformance in yesterday's session. Steve, I just wonder if we're underpricing event risk in early September 6th to be precise, when we get that payrolls report, and whether we could be having the same conversation we were having only 2 weeks ago.
John, as usual, you and I are on the same page. We had a meeting with our macro committee just a week ago to talk about all the things that concerned us and all the things that comforted us. And, you know, in 4 pages of notes across that discussion, I think the word inflation came up once. A third of the document was about jobs and the labor market. And this is before the revision. I think that September 6th really is going to help determine the path of Fed rate cuts. If that's a strong number, if that's a decent kind of in line to better than consensus number, somewhere around that 150,000 job level, then I think the Fed's really going to try to guide to 25 basis points in September and try to get the market comfortable with 1 cut per quarter. If, however, that number's soft, then the Fed will be forced to kind of come to the realization that they are in fact behind the curve. And then I think you're in the realm of 50 basis points. And so I think when you think about that balance of risks, and the Fed's talked about this, in a balance of risks that were almost exclusively tilted towards the inflation side, I think now it's the jobs market that's key. And we talked about claims, or you were talking about claims before I came on. It's important that those claims stay between 200 and 250,000. If they break into a 250 to 300,000 range, then I think you are in a much more aggressive Fed cut world, and one where you're a lot more worried about the labor market. We're not there yet, but that's why I'm saying it's a warning sign. You know, it's a yellow light. It's not a red light yet.
Steve, I just wonder about these warning signs, be it jobs, be it disinversion of the yield curve, be it the Somme rule triggered. Since World War II, we've only had 11 recessions. That's not exactly a lot of data to work with or get anything statistically significant. So when the lights are flashing, the yellows and maybe even some of the reds, how much faith can you actually put in them?
Less. Like I said earlier, there's 11 times since World War II that you've had an unemployment rate up 0.9%, and every time you were already in a recession and it kept going higher. And so you would look at that, and I think a lot of analysts made that mistake over the last couple of years, looking at these kinds of recession signals and then having very high conviction about impending doom, only to be proven that it was in fact a little bit different this time, at least so far. I think this could be another one of those examples. Yes, the unemployment rate's up, but the economy has added 2 million jobs during that period. And again, if you look at the U.S.-born labor force, that might be down. It's really this increase in non-U.S.-born workers. Now that, again, I'm not trying to make a political comment on that. I'm just saying that's different. You haven't had that kind of border policy. You haven't had that kind of immigration in these past examples. So that's why it's a yellow. That's why it's not a red. It says, okay, this is enough of a deterioration in the labor force that it warrants my attention. I might want to be a little bit more worried about valuation in certain areas. And maybe I pull back the size of an equity overweight, but I'm still overweight, right? We're still 3% overweight, which is 30% of our max. We still think that the base case is a slower but not careening lower economy. But I wake up and I look at that labor market data a little bit closer than I used to be, and I'm going to be slightly less patient.
It's made people nervous, jittery over the last few weeks, that's for sure. Steve is going to catch up and get your views. An update from Steve Cheveron of Federated Hermes. So this is what the calendar looks like, 8:30 Eastern time, 2 hours and about 15 minutes away. We get another read on jobless claims. And jobless claims over the last few weeks has been pretty contained. The previous week, 227. We're looking for about 232K later on this morning. What you heard there from Steve Cheveron, just the hope that that remains contained sub 250, and that's the hope again this morning.
Right, because we can live with the yellow flashes, right? We can do okay with that. Risk can continue to rally. Small caps can do well because it means we're getting cuts in an environment that's still consistent with an okay economy. If the labor market turns, I think that's when things need to start to reprice. The bond market will go from pricing, I don't know what it is, 20% odds of a 50 basis point, maybe to fully pricing it in. And the equity market, you'd have to argue, is incredibly offsides if that is the case, considering we keep getting closer and closer to a record, considering an equal weighted measure of the S&P is at another record. So I don't know, it might be a scary prospect if it does start to weaken.
Within 1% of all-time highs on a market cap weighted S&P 500 this morning. Let's give an update on stories elsewhere. Let's get to your Bloomberg brief with Yahira Hekes. Hey, Yahira.
Hi, John. Italian search and rescue teams have recovered a 5th body from a sunken yacht off the coast of Sicily, where British entrepreneur Mike Lynch and Morgan Stanley International Chair Jonathan Bloomer are feared dead. Search and rescue crews are continuing their 4th day of efforts. The yacht was hit by a tornado near Porticello, Italy on Monday. Authorities haven't yet released any statements confirming the identity of those recovered from the wreck. Meanwhile, the Paramount merger saga continues. Sources telling Bloomberg Edgar Bronfman Jr. has raised his offer to take over Paramount Global to $6 billion. That tops the $4.3 billion bid he made just 2 days ago, in a move that could upset Paramount's plan to merge with Skydance Media, led by David Ellison. That deal includes a 45-day period in which Paramount can review other offers. Bronfman, the media executive and Seagram heir, is reportedly expected to argue his proposal will result in less dilution for some shareholders. And Walt Disney has appointed former Morgan Stanley CEO James Gorman to lead the search for a successor to CEO Bob Iger. Gorman joined Disney's board this year and oversaw succession at Morgan Stanley, where he continues to serve as executive chairman. Disney is weighing both internal and external candidates to succeed Iger. His second term as CEO runs through 2026. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate the update. More from Yahira in about 30 minutes' time. Up next on the program, politics gets personal.
You know, when I was teaching, every year we'd elect a student body president. And you know what? Those teenagers could teach Donald Trump a hell of a lot about what a leader is.
You know, they always say, sure, please stick to policy, don't get personal. And yet they're getting personal all night long.
That conversation up next. Anne-Marie live from the DNC in Chicago after the commercial break. From New York City this morning, good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Live from New York City, welcome to the program. Your scores look like this on the S&P 500. No drama, up by 0.1% on the S&P, and the bond market yields a little bit higher by a basis point or two on a 10-year, 381.99. Under surveillance this morning, politics gets personal.
You know, when I was teaching, every year we'd elect a student body president. And you know what? Those teenagers could teach Donald Trump a hell of a lot about what a leader is. Leaders don't spend all day insulting people and blaming others.
You know, they always say, sure, please stick to policy, don't get personal. And yet they're getting personal all night long, these people. Do I still have to stick to policy?
Here's the latest, the final day of the DNC kicking off. Vice President Kamala Harris taking the stage this evening to formally accept the Democratic nomination and deliver the keynote address. Donald Trump continuing his counter-programming campaign. Trump in North Carolina yesterday, delivering his first outdoor rally following an assassination attempt on his life last month. Trump now heading to the US-Mexico border in Arizona, looking to attack Harris on immigration. Anne-Marie joins us now from the DNC. Anne-Marie, I'm channeling Bramo, who's making her way to Jackson Hole, Wyoming, and she she'd be saying, can we please make this about the policy and get away from the personal? Can we make about the policy at the DNC? What are the policies coming out of that convention?
Well, we're going to hear from Kamala Harris tonight, Jonathan, when she gets on that stage and formally accepts the party's nomination to be the top of the ticket, to be the president. 180 basically degree reversal from where we were just a month ago when Biden was the top of the ticket. So that is why we're still waiting to hear a lot about her policy proposals. I actually sat down with some members of her team yesterday, and a lot of questions I was trying to dig into, whether it was the economy or foreign policy, immigration. I got a lot of, I don't want to get ahead of the vice president. We heard last week from her when it came to the economy. Potentially we'll see her build that out. They want to lean into this because they know the cost of living is top of mind of American voters. But I would say tonight it's going to be a lot about rhetoric, a lot about personality, and a little bit light on the details. I go back to what Libby Cantrell told you yesterday. If this is about personality and vibes, Kamala Harris could win it. If it's about policy, potentially Donald Trump could win it. I will note, though, there was a shift at this DNC, definitely compared to past DNCs when it comes to immigration, to the right for this Democratic Party. Tom Suozzi got up on the stage yesterday. This is an individual who was able to flip his district on Long Island from red to blue and said the border is broken. We heard from Connecticut Senator Chris Murphy talking about the fact this is the individual that worked with James Lankford to write that bipartisan immigration bill, and said the bill would have been passed if it were not for Donald Trump killing it because he wants the issue. And today Trump is going to have that issue, Jonathan, when he goes down to the southern border to Arizona.
I was going to say, Anne-Marie, usually the opposing party during national conventions are kind of quiet because they understand the media's attention is squarely on that. How has Trump's success been in cutting through that with the swing state tours he's going on and, as you point out, now heading to the border?
Well, he's going on a number of these rallies to a number of these states that he needs to win, notably yesterday, North Carolina, which is now seen as a toss-up. That is a state Republicans need to win. Obama won it in 2008. Before that, no Democrat had carried that state since 1976. So I actually think it's notable he's in North Carolina, spending a lot of time and capital there, instead of potentially could have been using that time in Pennsylvania or another border state. He's trying to go after Kamala Harris on the issues, but Trump is at times unable to help himself and also make this personal. Yesterday, calling her Comrade Kamala, trying to say that she is a communist, calling her the border czar, saying that she's failed on border policies, instead of really going after some of the data around the issues, which his campaign desperately wants him to do.
Anne-Marie, thank you. Appreciate the update. We'll catch up with MH with some select guests a little bit later on this morning. It's pretty obvious why the campaign wants the former president to focus on the issues. The top two issues in this country right now in this election, the economy and immigration. On those two issues, the Democrats poll very poorly relative to Republicans on those two issues, which is why those issues should be top of mind for Republicans as they campaign. Coming up on this program, we'll catch up with Bloomberg's Craig Trudell as Ford changes course on the company's EV strategy. That conversation just around the corner, with equity futures positive by about 0.1%. You're watching Bloomberg TV.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Stocks doing okay on the S&P 500, positive by 0.1%. Likewise on NASDAQ 100 futures. On the S&P 500 yesterday, a close back through 5,600, an all-time high again on the equal-weighted S&P 500. And unlike this morning, underperformance on the small caps on the session today. Yesterday, outperformance on the Russell. This came from Laurie Calvasina over at RBC. We end the summer of 24 with increased conviction that August 5th was the low in the recent pullback, even if we get some choppiness, Danny. RBC saying it's likely there to be greeting us at the end will be a 5,700 price on the S&P 500. They're feeling good about it.
The wall of worry we climbed is remarkable, and not even just how far we had to go, but the pace of how we had to do it and what has been rallying. I think this is the most remarkable part of it, is it's not just big tech comes back, which it largely has, but it's the breadth of it. It's an equal-weighted measure of the S&P 500 going to new highs. It's the fact that defensive, cyclicals, all of them are sort of rallying together. And if you go back to before August 5th, there was this idea that it was only the large caps that were bringing us to new gains. Now it's everything. So maybe something has changed. Maybe it's, dare I say, more healthy.
Participation's improved, which undoubtedly some people might say is healthy, but what are we looking for? We're looking for growth to hold up. Okay, solid but not strong, we can cope with that. Maybe a deceleration from here, but no real downturn. At the same time, we want all of these rate cuts. Now, that kind of disconnect, Christian Mamani of Lafayette College was talking about this yesterday. Are we looking for a soft landing funded by rate cuts typically associated with a hard landing?
And this is the problem, is that the Fed has been talking about going slow, and they tend to go slow until something forces them. So the question this time around, will something force them to go faster, to do 50 basis points of cuts in multiple meetings? And what does it mean for this equity market if it is? It's this disconnect between equity markets and bond markets that so many people have talked about. But again, there is this argument that they maybe have to go fast just to get to something that looks like neutral.
Well, let's check in on the bond market, and then we can turn to foreign exchange, because there's lots to talk about there. In fixed income at the moment, at the front end of the curve, we're up by 2 or 3 basis points, 395.93. On a 10-year, we're up by about 2 basis points to 382. Just to check in on a 30-year maturity for you, just a little north of 4%, 4.1%, just to round that up for you. If you switch at the board, I want to talk about foreign exchange. So let's turn the page and sit on a couple of currency pairs for you. Let's pick out 2 of these 3, the euro and sterling. The euro, 111.38, negative 0.1% on the session. The PMI much better than expected, but the heavy lifting came from France. And I'll tell you what I mean by that. The services PMI, this is a preliminary read for the month of August, came in at 55.0. We were looking for 50.3. On the composite, we were looking for a contractionary figure sub 50 of 49.2, and we got 52.7. And because I think in a lot of people's minds, that services read for August was supported by what happened with the Olympics, that's going to fade as the year progresses. So people are discounting the importance of this data this morning, for the euro at least. So we're back down to about 111.39. The same can't be said for what's happening in the UK. Data out of the UK better than expected. Sterling just a little bit stronger, comfortably through 130 now. 130, 117 against the US dollar.
Last time we had strong data in the UK, everyone was just saying it was the Taylor Swift effect, which I don't think there's as much of that anymore, which thank goodness, because I'm tired of central bankers talking about Taylor Swift. It feels very odd and uncomfortable. But also part of it is the dollar has been weakening quite significantly this week. And you've seen some flex of maybe the carry unwind isn't yet over. Sure, dollar versus the yen hasn't moved that much, but dollar Swissy moved some 1%. Peso versus the yen weakened by 2.6% on Tuesday, and then again 1.5% yesterday. George Saravelis at Deutsche Bank points this out, that save for today, some of the strength in the euro has been, one, Fed repricing, but two, something is still going on with this carry trade.
DXY, just to pick up the dollar index, DXY coming off the back of a fourth consecutive day of weakness, a little bit stronger on the session today. If we get a fifth week of weakness, which is what we're on course for, longest weekly losing streak for the dollar going back to April 23, to Danny's point, that dollar weakness is quite pronounced. We've seen it repeatedly over the last few weeks or so. Let's turn to our top stories. Under surveillance this morning, Kamala Harris taking the stage tonight at the DNC, formally accepting the Democratic nomination and delivering a keynote address. Donald Trump countering with a visit to the US-Mexico border and a rally in Arizona. Elsewhere, I want to turn to this story and spend a bit of time on it. A 30-minute delay in releasing the key US payrolls revision wasn't felt by everyone. Bloomberg reporting that Mizuho, BNP Paribas, and Nomura all called the Bureau of Labor Statistics and obtained the data directly after it wasn't released as scheduled at 10 a.m. Eastern Time. Now, a good friend of ours, an old colleague, a former colleague, now at BNP Paribas, Yelena Shiletseva, I love this quote. We called the public line a couple of times and they gave us the number. It was that straightforward.
Exactly, and some of the reporting was that the BLS thought that maybe it had published on their website, so we're confused that it didn't, and it was a technical error, so they thought, why not give it to someone on the phone? But listen, government clumsiness is especially a problem when it comes to market-moving data, because you have this appearance of giving people an unfair advantage. You have this appearance of giving people favoritism. So even if, they picked up the phone, Yelena calls, they're like, yeah, of course, we'll give you the data. It's the image that's a problem. And this is why, for example, at Jackson Hole, I didn't realize this, but I learned recently that they don't invite anybody from banks. They don't invite anyone from firms because they don't want to make it look like they're giving people unfair access. It's not necessarily that they are. It's not necessarily that the BLS is, but it is the appearance of that kind of erodes ever so slowly the trust in some of these government organizations.
The effort to avoid that, though, is exactly why we ended up in a place we ended up in yesterday. For people not in the world of the media, typically these numbers used to be given to news organizations under embargo. Then once you got the release time, they were released. Now everyone's just waiting for the same information. Mike McKee sits here literally waiting for the numbers to drop on the website. That's not how we used to do this. I've asked them directly about this in the past. What is going on? What are you willing to do? Because it's not the first time that we've had this issue with delays to releasing the economic data. Really important economic data as well. And I think at some point they've got to do something about it.
And I think especially for the jobs numbers, just because there are a lot of very odd, I will be honest, conspiracy theories out there that made this report so important. Donald Trump was talking about it yesterday. He called it a massive scandal that they revised some of the labor figures, basically claiming that the Obama administration had been massaging things, and this revision was proof as such, which again is weird because presumably if you're going to massage numbers, you're not going to reveal that they were wrong. Even so, these kinds of figures, they're really important, not just for the market, but because, again, of people's trust in these institutions, which has already been worn away. So these types of figures need to be really important. You think they'd kind of give extra care to it, and I don't know, check the website and see that it hadn't published and do something about it?
And they seem to be totally unaware. So just dial the number next time. I think we're all going to do the same thing. Let's turn to the main event, the Fed's annual get-together at Jackson Hole kicking off today, with traders awaiting Chairman Powell's remarks tomorrow for some clues about rate cuts as soon as September. More dovish signals came from the Fed minutes, with several officials seeing a plausible case for cutting in July. Another key data point due ahead of Powell's remarks. We'll get jobless claims at 8:30 Eastern Time. How much of a difference do those revisions yesterday make to this Federal Reserve get-together this week and the FOMC meeting next month?
It depends what you already believe, because that's what we did with this revisions data. If you believe that the Fed should be acting sooner, it enforced that the labor market has been weakening for some time. If you don't think so, it enforced, hey, still above 170,000, that is Goldilocks, we are good to just go 25 basis points. Considering the Fed has been talking about moving gradually, they might fall into the latter camp. But again, we learned from the minutes that whether or not they did it at the meeting or afterwards and massaged it, they've now more focused on the risk of the labor market, the risk of not cutting soon enough. So they might be more closely attuned to some of these job figures now.
When you hear that there was a 70,000 per month reduction in average payrolls for the year ending March 2024, it sounds like a heck of a lot of jobs, because it is. When you go through the average print, though, of 170 versus 240, 170 still sounds pretty decent, doesn't it?
It does. Also, one of the weird things with this, 44% of the revisions came from business practices, in other words, consulting. And I just want to know what's going on with these consulting firms. That 44% were professional services. I mean, I know they were firing people. That this seemed especially bad. I don't know, it was a weird revision all around, but that one in particular, I don't know what to do with that information.
There's no conspiracy here. This is a very large economy, and they're very bad at finding out how many jobs we're adding every single month, because it is a very, very big economy. We'll come back to this a little bit later. I want to turn to the autos as well. Ford announcing it's shifting gears in its EV strategy once again, scrapping plans for a fully electric SUV in a shift that could cost the company almost $2 billion. Bloomberg's Craig Trudeau joins us now for more. Craig, great to touch base with you, sir. We've talked about this a million times. What's the latest coming from Ford?
Yeah, speaking of things that keep happening over and over again, Ford itself it just continues to have sort of pivot after pivot, and I think yesterday's news that that they're going to scrap a three-row SUV is really kind of remarkable, because it wasn't that long that we heard from Jim Farley, him kind of pointing to this product as something that was going to distinguish Ford from the pack and separate them from a Tesla or a BYD. Now that vehicle is going by the wayside. They're pushing out as well their full-size pickup, their replacement for the F-150 Lightning. That won't come for another year. They already had delayed that product. So, this is a case of a company that's, really been losing quite a bit of money on its investments in electric vehicles, struggling with getting to scale, struggling with high battery costs. And, I think they're really, wanting to kind of recalibrate, get to where, as they're rolling out new models, they have greater confidence in the ability for those vehicles to be profitable within a year of launch, which is the sort of expectation you would, come to think your internal combustion engine vehicles would be able to pull off.
And Craig, that's exactly what Jim Farley told our colleagues about this over and over again. We're waiting for profitability. We need models that can turn out profitability. What needs to be in place for that to happen, and how long might it take until they can see production putting out an EV that does become profitable in a year out?
I think, one of the aspects of this announcement out of Ford is also a change in their battery strategy. So they're really going to lean into onshoring battery sourcing. So, for example, they source some batteries for the Mustang Mach-E, which actually is selling pretty well, but they source those from Poland, and that has hurt their ability to qualify for tax credits in the U.S. And so by moving that production from Poland to the U.S., to Michigan, they'll be able to take advantage of those tax credits, which, went up to $7,500. That's a substantial amount of money for a consumer and going to help their cause. So, in addition to making that change, they are scaling up battery production in other parts of the U.S., and that will help. But this is really a case of also just, having to sort of reassess how ready the consumer is to go fully electric. Ford is having much greater success with, getting the American consumer into a hybrid as opposed to a battery electric vehicle. And so that's another aspect of this announcement that, rather than bringing a fully electric three-row SUV to market, they're going to bring hybrids to market, maybe even an extended range electric vehicle where, the battery does most of the work, but it has a small gas engine to keep that battery charged as it's rolling along.
What does inventory look like at some of these companies, Craig? I'm just thinking about people who might be in the business to buy a new vehicle, an EV, and I cannot think of why they do it. Why they pull the trigger on buying a new vehicle when the improvements we could see over the next few years in battery technology and range could be absolutely massive. Why would you dump a load of cash into a market that's moving this quickly?
I think that's a great question, and I do wonder how much the consumer is necessarily all that sophisticated in following things that closely. But to the extent that the consumer is doing their homework, they're seeing the resale values of EVs go from just a year or two ago it was very much a success story when we saw Tesla really dramatically bring their prices down because Tesla is still, such a powerhouse in the U.S. market. That's really done a number on resale values. So, the combination of EVs struggling to retain their value, the improvements that we're seeing, to your point, in battery range and costs on a year-to-year basis, it doesn't necessarily make a whole lot of sense if you're a consumer to make that purchase now and maybe put it off, and that's not helping momentum here.
Greg, forgive me for putting you on the spot, but if I drive away from a dealership in a new car, what's the loss look like on day one? What's the fall away look like?
I mean, it kind of depends on the model, of course, but I think this is generally the case with any vehicle where off the lot the rough approximation of depreciation is I would say somewhere around 20%. I think with EVs it's probably more than that at this point.
Brutal. Craig, thank you, sir. Appreciate the update. Craig Trudell there of Bloomberg. The destination hasn't changed. This is where the market's going to go for now, at least. This is where government officials, particularly the Democrats, want the market to go. But the journey's changed markedly over the last year or so.
Yeah, it has. But also part of the problem is not even, do I wait to buy this because the technology is going to get better, but do I need to wait to buy this until there's actual infrastructure in the U.S. that I can go on a road trip and charge one of these things? Which is why you've seen some of these car makers turn more to sort of the hybrid models. But there's still a lot of headwinds to getting adoption, especially when still Ford doesn't have a model they think can be profitable.
These governments have put these companies in such compromising positions. They want to simultaneously support the workers that work there, and at the same time, they've put these companies in a compromising position where they have to move towards making a vehicle that they're struggling to make money on. That's the situation we're in.
Right, and then you have someone like Tesla that gets really reliant on government credit. So that becomes really important for them in order to have a profitability every single earnings quarter. And then you put that into a new administration. And what that means for these car makers that previously wanted to double down on EVs. If you need to rely on the government to do that, what happens when there's a change and you get a government less friendly to these types of measures?
Ford is up by about 1/3 of 1% in the pre-market. Let's give you an update on stories elsewhere with your Bloomberg brief. Here's Yahara Hackes.
Hi, John. Sources telling Bloomberg News the head of Apple's App Store, Matt Fisker, who's run the lucrative business since 2010, is leaving in October. Apple's decision comes in response to regulatory pressure on its App Store, with lawmakers alleging it wields too much power in the mobile software market. Meanwhile, shares of Snowflake plunging in the pre-market down more than 9%, the software developer delivering a sales forecast that failed to reassure investors it can gain ground in the market for AI software tools. The company is navigating a challenging environment, including a recent CEO change and security breaches affecting high-profile clients like AT&T and Live Nation. And reports indicate independent Robert F. Kennedy Jr. is expected to end his presidential campaign this week. He plans to give a speech about his future tomorrow from Phoenix, this coming after Kennedy's running mate suggested he could potentially endorse Donald Trump. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, opposing outcomes.
If this is an election about personality, about vibes, Kamala Harris could do very well. If this is an election, on the other hand, about policy, then she's quite vulnerable, and you could see Trump winning.
We'll talk about policy next on the program, live from New York City. You're watching Bloomberg Surveillance.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China, all of that is in our interest. And whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Live from New York City, welcome to the program. Your scores on the S&P 500 shaping up as follows. We are firmer by about 0.1%, adding to yesterday's gains. As we said a little bit earlier on the program, all-time high on the equal weight S&P 500 at the close yesterday. This morning, the market cap S&P 500 after the close yesterday within 1